If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Hello, ladies and gentlemen. We have a new member by the looks of it, BSBK27. Appreciate you on behalf of the A1 team. Good to have you on board. What's happening to gold? It's it's nicking time. Never heard that one before. Don't worry about the screen, by the way. It's just because I'm obviously reading chat. This will move soon, so don't worry about that. But yeah, Nick will be on soon. For anyone that's wondering, we do have obviously the schedule on the A1 Trading website. You can always check here to see what guests we've got. So it's me, then Alan, then we have Nick and Chris, and then Alan again, and then we have Tiger today. But Friday, ladies and gentlemen, hope everyone's had a fantastic week. It's good to see everyone here. Goldie's good mood today. Yeah, Goldie's having a fantastic day. I want to position in gold and silver, don't we all? Obo, good to see you, my friend. Luna, Jeremy, good to see you guys. 2288, One Opportunity, Prizak, good to see you guys. Hope everyone's doing well. Edge Finder, my surest tour guide. Royal, good to see you, my friend. Yeah, Royal's a nice guy. Good to see him here. Anyway, gold on an absolute rocket ship today. So I've got 3 positions in gold, actually. I'm not to brag or anything, but I might be the world's most accurate trader. No, of course, I'm joking. But yeah, I do have 3 positions in gold. I got one around 4,000, another one around 4,050, and I did one in a few days ago around 4,300. Now, to be completely transparent, this wasn't a case of me being super accurate. This was actually kind of a DCA approach that went wrong. So for anyone that hasn't heard what I was trying to do here, I actually expected gold to go lower. So I got the direction completely wrong. So I wanted to see gold around 3,500, and that was at the time, gold wasn't really getting much of a read on the Edge Finder. I think it was actually leaning more towards the bearish side. We had oil prices that were still climbing at that time. So I was like, you know what? I do think the next stop, if gold does break lower, would be 3,500. So with that in mind, I had pending orders every $100 increment down from 4,000. Now, of course, that hasn't happened. So actually now I'm stuck in these 2 really, really small positions, again, because I was planning to build up more of a size at lower prices. But either way, I'm still long. The market's moving higher. So how much can I really complain? I don't think that much. I'm not going to be ungrateful about what I've got here. So I think realistically, the only thing we can do when it comes to gold is just wait. So if you're not already in a position, there is no way I would even consider being a buyer at the moment. So I would say the most sensible thing would just be, well, of course, for the way I trade, I'm sure you trade in a slightly different way, but I would just be drawing fibs from wherever the lows are printed to the highs and just waiting for these pullbacks into the fib zone, whether it's previous low or the previous sort of daily low at the bottom of this range. Either one, it doesn't matter too much. But yeah, as far as I'm concerned, buying dips is absolutely the way to go. Not financial advice, of course. But as we can see, gold is getting a very bullish reading here on the edge finder. It's got a score of 8. The 3 pillars are in line. So the 3 pillars, as far as I'm concerned, are the 3 categories that really feed into central bank policy, which is economic growth, inflation, and jobs market. A1 Trading has done a fantastic job of making it super, super simple here. By the way, code ELITE for a discount. But yeah, as you can see, economic growth is bullish, inflation is bullish, jobs market is bullish, the technicals are bullish. Institutional positioning is neutral. Net positioning remains bullish, which, you know, is very, very standard for gold. However, the previous week, so last week's COT change, actually, was it last week? Yeah, last week's COT change, or whatever, the latest buy and sells, does indicate that they actually had a negative change. So they're on the wrong side of that if they, you know, if they were selling off their positions. So, you know, again, not to toot my own horn, but, you know, maybe I should open jamescapitalmanagement.org LLC. Only problem with gold is that I should have bought more. Yeah, I feel exactly the same. It's unfortunate. We had so many doubters. Props to those who held and believed. Absolutely. Gold break to new highs today. Yes, indeed, indeed. Bank of James. Ah, yeah. Shout out to those that remember the Central Bank of James name. That was fleeting, but it was good times. I'm new. Which website is this you use to read news? So this one here is the Edge Finder. It's not free. I'll be completely upfront. There might be a free trial. I'm not 100% sure, but to get full access, it's not free. I'll be completely honest with you. However, there's always discounts and promos going on. You can use my code, which is ELITE, just the word ELITE for, I think it's 15%. Might be a bit wrong on that one. But again, you can get a discount there. Or if you want to do it all manually, go to Google Sheets and lay it all out yourself. You can spend 4 hours a day updating that for you. But yeah, that's that. King of Kings, good to see you, my dude. James, what's my view on gold? Yeah, so we just actually discussed gold. I don't see any other direction than bullish. So we've got gold and silver that are getting very bullish readings, both with a score of 8. And you can, I mean, what can we really say about this other than it's going up? So I think realistically, the situation we're in is obviously a weaker dollar. We had the Treasury news that came out earlier in the week. We've got really poor fundamental data for the dollar. I just think the whole landscape really is very positive for gold. And what we were talking about yesterday, or what I mentioned very briefly yesterday, was the oil prices are going to the upside, but we're not seeing that get reflected within the dollar. If you guys remember, when oil was doing well, you know, when we had the fluctuations to the upside, normally or typically what we saw was that reflected on the US dollar positively. We saw the dollar gain strength alongside oil. And that's obviously with the connection with the yields, inflation expectations, and so on. But we're not seeing that anymore. What we are seeing, again, is oil moving to the upside, and the dollar is remaining very pressured to the downside, actually returning back into this 1-year range. So this could be down to, I would say, one of two things. Either no one cares about the situation anymore. And the reason I say that is if we actually go to, let's say, gold. I think gold's a good example to show here. If we go back to the Ukraine war, which was, what year was that? 2024, 2022? I can't actually remember. Either way, where was it? I think it was around here. Was it 2024? So I'm fairly sure it was around this period. Maybe not. Again, I can't remember. But anyway, it doesn't matter what year it started. I'm blanking for some reason. The markets run on narratives and themes. And once a narrative or theme is essentially exhausted, the markets move on to the next thing. So that could be what we're seeing here with the Iran situation. And, you know, it's been ongoing. We've had so many changes in headlines, from escalations to de-escalations to re-escalations, peace deals, no peace deals. Then we had, was it a 30-day ceasefire that didn't lead into anything? Then we had a 60-day ceasefire that didn't lead into much. And it's kind of just one of those things, like, how long are we going to trade off the same BS? So it could be that, in terms of, again, the markets have just kind of lost interest, and we're now focusing on the fact that rate hikes are getting priced out. The dollar fundamentals are weak, and we're going back to essentially what we could consider normal market conditions. Or it could also be the fact, again, that we had the Treasury news come out that obviously weakened the dollar, weaker dollar news, so on and so on. So that's the way I'm viewing it at the moment, anyway. But again, I do want to clarify, I'm away. I'm not at my desk as I normally am. So first of all, audio is probably quite poor, but also I'm not on top of the whole macro landscape, as I typically try to be. So I might be a little bit, behind on things or a little bit misinformed. Just bear with me. And feel free to correct me as well. By the edge finder, don't be a sausage. I support that. If I could highlight your message, I would. That is a message of the day, endorsed by James. Could we look at the new natural gas? Well, yes, we can, because the A1 guys added nat gas, if I can find it. So let's just go to asset scorecard. That's probably easier. Nat gas. There you go. So it's actually just got -1. So fundamentally speaking, there really isn't much here. So we've got technicals bullish, crowd sentiment's bearish, institutional positioning is neutral. We've got growth that's bearish, jobs market's bearish, but inflation's bullish. So, excuse me. Yeah, I just don't really see much here, to be honest with you. In terms of fundamentals, again, I just don't see anything appealing here. So if we go to the nat gas chart, yeah, I mean, price action's reflecting kind of the same thing. So we see a very neutral score. We see price actions just consolidating sideways. We've got no direction, technically speaking, really, especially on a short-term basis. So I suppose we could look at the overall trend here. We did flip bearish. We've, respected this sort of 200 moving average in both situations. So yeah, I suppose the bearish lean makes a bit of sense, but yeah, there's just not much here that interests me at all. 2022, that was it. I was a bit too late in 2024 then, wasn't I? As I said, I'm a bit out of it today. Fly tie, good to see you. Hello to you as well. James, earlier this week we looked at Europound shorts. Are they still on? I haven't looked at Europound since we spoke about it on stream together. So what do we see here? Let me use the daily. It just looks a bit too choppy on the H4. Yeah, so what we did when we were looking at Europound was take the daily high to the daily low, and we were looking at this fib zone. So if we account for the way that, I normally present trades and do my analysis, which is, trading off fib levels and pullbacks and trends, yes, this is actually a very valid trade. It looks great. We've got the H4 that's bearish. We've got, again, the fib zone that we're currently retesting this 50% retracement level. That all looks good. The problem I've got, though, is this previous level of support remains untested. So when we have a break below, it's not like a factual must happen thing, but I really like to see retests of these levels. So when I'm trading a fib, I love the fib to line up with the break and retest zone. Does that make sense? So in this case, I want the, I would want this fib to actually be moved up slightly to then, again, align with this previous level of support. So now what I've got is I've got the fib zone here, but then I've also got a level above the fib zone. And this is quite a large area to get an entry wrong, because, if I, for example, entered a market price here, the market could very easily come into like a 0.5% drawdown, maybe, give or take a little bit. But that's, 0.5%, where if I just waited and we did get this retest, I could actually get a better entry. So this is the sort of problem I'm sat with. Do I actually want to enter right now and just follow my strategy blindly? Or do I want to follow my instinct and just wait a little bit more to see how price reacts? And in this case, I think I just want to wait. I'm also not sure if we're getting a score for Europound. Let's check. No, we're not actually. Well, there you go. We've got absolutely nothing. We don't have a single thing going on here. We've got technicals bullish, institutional activity is bearish, sentiment on retail is bullish, economic growth is bearish, inflation is bullish. Yeah, we've got a completely flat score there. So yeah, the technicals were a little bit murky. Fundamentals are completely dead. So yeah, there's nothing for me there, unfortunately. Shout out to Sir James from Philippines. Thank you very much. What about gold? We've looked at gold twice already, my friend. So we could maybe revisit gold later in the stream, but I'm not going to do it again for the third time in the first 10 minutes I've been here. James, model looking long euro pound currency pairs. I'll be honest, I'm not sure what's going on with the sterling at the moment. Let's take a look at heat maps. Let's go to UK. I think it was quite bleak. Yeah, it's 40%. Just bear with me. Yeah, so we've got growth at 0.4. It was on forecast, but not expansion by any means. Manufacturing PMI was bearish, missed forecast. Services PMI bullish. Yeah, I'm not seeing much on a fundamental side here that could really warrant me being optimistic by any means. I suppose we could look at pound dollar, pound yen, pound New Zealand, pound Swiss. So what I'm taking away from this actually isn't necessarily that the pound is strong. It's more that the pound is slightly less weak than other currencies like the dollar. So that kind of just puts me off a little bit. When I'm trading, my whole objective really is to find a strong currency and a weak currency and trade them against each other, not necessarily to find two weak currencies and then figure out which one's less weak. Does that make sense? I mean, they're still tradable. I'm not saying it's a terrible idea, but it's just not what I like to see, really. However, obviously, with the dollar's weakness that we are seeing, I think pound dollar could still be a great call. So let's have a look. Oh, wait, hold on. This is, I want this chart here. So very clear breakout, this downtrend that we're in. H4's flipped bullish with the moving averages. We need to adjust the fib now to the new highs and lows. So I would consider that here. I actually quite like this. So again, fib from the low to where the current high is, it could always go higher. But at the moment, our 50% retracement lines up with the previous high on the left. So again, this would be the break, potentially have a retest into the 50% retracement and continuation higher. So the technical setup looks fine. But then, of course, it's always the question of, are we actually going to get this type of pullback? I would argue it's quite likely, just because we are also then coming into these highs, or we're currently at these highs. So we could sort of double top, retrace, retest, and then continue from there. So yeah, I think the idea is there, but again, it's really just a case of waiting on pound dollar specifically here. Special operation. Ukraine special operation. Thoughts on the Nikkei, New Zealand, US dollar? Yes, I think actually the Nikkei was getting a bearish reading. Is it still there? It's -6, which is quite nice. So yeah, we could absolutely look to go short on the Nikkei. As I told you guys yesterday, I am short on the Nasdaq. So I took a short position roughly around here. So it's around break even at the moment. I mean, that's got nothing to do with what you actually asked on the Nikkei, but I wanted to mention that whilst on my mind. So yeah, as we were saying yesterday, because we looked at this one yesterday as well, we took a fib from the high to the low on this daily time frame. What we saw was a pull into our fib zone, slight break above, but we didn't hold. We continuously failed and then retraced back below. So technically speaking, I wouldn't mind being short at some point on the Nikkei. That's the wrong position here. Yeah, I wouldn't mind being short at some point, but it's really a question of, am I going to end up getting trapped again? Because I was short on Nikkei here at the, again, the sort of break, actually it was over here on the break below, retest into this level. This also was a fib level at the time as well, looking for this continuation lower. The edge finder was bearish. It was all great. And obviously that didn't work out very well. So what I like to reference when looking at the Nikkei specifically is this weekly 200 Bollinger Band. So what we can see typically is when this market becomes overbought and extends above the upper Bollinger Band, we often do revert back towards the 200 weekly moving average. We can see it here, we can see it here, and we can see it here as well. Now, what we've seen over the past sort of year, give or take, is we've been extending this overbought sort of technical condition with very little pullbacks. And what we've seen is actually the upper Bollinger Band acting as a level of support rather than it being a area for sort of false breakout and then reversion lower. So I'm a little bit cautious on actually going short, although it does make sense and I do like the idea. I'm a little bit hesitant to try, to repeat the same mistake I made last time. So I think what I would need to see here is actually a break below the previous low on this weekly time frame. Now, of course, that might ruin the risk to reward. I would be giving up potential price movement, but again, I just really don't want a repeat of the same issue that I had previously there. Oh, we'll do New Zealand dollar as well. I forgot about that one. I'm doing well, thank you very much. How are you doing? Do you think gold and the dollar will get to pull back? I would imagine so, yeah, at some point. When that will be, I've got no idea. But markets don't typically move forever. We will see pullbacks at some point. It could be You know, it could be later today, it could be next week, could be next month. I don't know. Thoughts on pound CAD? Yeah, we can look at pound CAD as well. Gold to 4,600. Sell. Why would you want to sell gold? Good afternoon, James. Good afternoon to you as well, Carlos. Hope you're well. Christian, hello, hello. Good day. I saw an indicator yesterday you used for support resistance on the dollar with arrows. That's not an indicator. That's just me being very bored and having a little bit of too much time on my hands. Yeah, I'm assuming this is what you're talking about. I drew these with the little drawing things here. So this, yeah, a lot of manual drawing there, not an indicator, unfortunately. James is curious on the Edge Finder. Some days the score completely drops off. What's your hold on. Completely drops off. What if you're in the position? Do you tend to close or hold? For example, pound New Zealand was bullish. Okay, so in those situations, it really depends on why I took the trade. So if it was a case of just the Edge Finder and a technical setup, yes, I would lean towards closing it. But then again, it depends on the condition of the trade. Have I already trailed my stops into profit? Am I break even? Am I in a loss? If I'm in a loss or the trade isn't doing much, then yes, I will probably close it. But if I'm already in profit and I've trailed my stops, I'll just let the trade run. So yeah, that's the general rule I follow. Pound New Zealand, Aussie New Zealand long. Wow, stream within the stream. Yeah, yeah. It's not ideal, but again, it is the best I can do at the moment while I'm on the road. Okay, so New Zealand, US dollar, then pound New Zealand, and then Aussie New Zealand. So there's a big demand for the New Zealand dollar at the moment. Where are we looking? New Zealand, US dollar here. Oh, by the way, just before I forget, let's just remind me, I'm still long on the Aussie US dollar position here as well. So that's another one which we can cover later if anyone wants. Yeah, so, okay. What do we have on the Edge Finder? Let me just have a quick look here. We don't have anything actually for New Zealand US dollar. So I think what this leads me to lean towards actually is a opportunity cost. So yes, this market's bullish, and yes, I think it could continue higher, especially with the weaker dollar. However, because there's no reading on the Edge Finder, what that tells us is that the New Zealand dollar isn't necessarily very strong either. So in this case, I would prefer to pay attention to something like pound dollar, dollar yen, euro dollar, and the Aussie US dollar as well. Again, opportunity cost rather than it being a case of this trade's just not good. So if you wanted to trade this market specifically for whatever reason, I would take the previous low to the current high. We've got the H4 bullish trend here. What we can see is our fib zone lines up with the previous high on the left. Again, we've broken out. We could look for the retracement and retest into this level and continuation higher. I actually really like this idea. But again, I don't think I would take it just because I would prefer to look at something like pound dollar. I'm already in the Aussie US dollar. I'm already in gold as well. So I don't want to overexpose myself to the US dollar. But that is how I would approach that one. So what was next? Was it pound New Zealand? Let's see, pound New Zealand. Yeah, so we were looking at this one yesterday, and I woke up because I set 2 alerts on the pound New Zealand yesterday because I didn't really want to miss it. But I woke up and the alert at the lower side was hit. Now, since then, we've broken below the fib, and I don't like this anymore because what I would want to see here is a continuation higher. You know, very simple break of the structure, retest into the fib, and then again that continuation idea. We've not seen that. What we're actually seeing really here is just consolidation. We've had the potential entry here, failure to break higher, and now we're actually continuing to move lower. So I just do not see anything, technically speaking, that would want me or warrant me getting in. Pound New Zealand is bullish on the Edge Finder, but it's lost 3 points of its score, as we can see here over the past 24 hours or 1 day. So it's just not looking great. The fact the technicals are a bit choppy, the score is decreasing. So yeah, I'm going to avoid that one. And then Aussie New Zealand. Yeah, so I was looking to be a buyer, which actually hasn't worked out. So I'm glad I avoided that one. However, I do still like it to the long side. So it's more really a case of waiting for something to happen. So we are still respecting this level of support here on the H4. The problem is, however, we are in this H4 downtrend. We've created a double top here, failure to break out. We are also still, excuse me, we're also still at this weekly, or at least, towards this weekly level of resistance as well. So it's really a case of, even if we did get into a buy position, how much upside potential really is there? Are we maybe in for something more like this, where we actually come a little bit higher, retest into the previous high, double top, and then, continuation lower? Maybe, and it's very difficult to tell. I've kind of moved on from this trade idea. I was quite optimistic about being on the long side, but it's just not really given me much to work with. So unfortunately, it's just not really something I'm that interested in at this point. How much of a pullback do you think will occur in gold? Presumably this will be quite temporary before rising again. I would imagine so. Yes. So with gold, I would expect a pullback, but again, it really is a case of when this happens. We're seeing extreme momentum to the upside here. So it's like we had this, prolonged move to the downside, lots of chop, and we're now correcting it very, very quickly. So it's really a question of how much momentum is going to continue. Now, of course, it is Friday, so I wouldn't expect this to last, really that much longer. It might continue for the rest of the day, just continuing higher. And then next week, we have a bit of a slowdown. Monday, Tuesday, we have a pullback, and then continuation later in the week. I don't know if that's going to happen, by the way. That's just a very loose idea. But the reason I'm saying that is I think there really isn't much stopping this market, technically speaking. So yes, we're kind of at this high. It's a minor high, though. The next real high is here. So that's around, I don't know, let's say 4,750. I could imagine us coming to this level, having some sort of pullback, and then continuation higher from this point. So that's what I would be looking for. But again, whether that will happen, I really don't know. So it's a case really of just monitoring the market, waiting for pullbacks, and then looking to buy with whatever strategy you use. In my case, as I said earlier, it would be the fib from the low to the high, looking for some sort of pullback into the fib zone, and then executing a long position. The direction and fundamentals are not even in question for me. I'm very bullish on gold and silver as well. So it's really, again, as far as I'm concerned, it's just a case of waiting. I'm a short-term short-term long and Aussie US dollar, took a 4-hour continuation. Very, very good. I like it. I'm in that position as well. Oil moving fast, lower. Is it moving lower again? I swear we just checked in. It was doing quite well. Let's see. Yeah, I mean, I suppose we've got a bit of a double wick here on the daily. No, nothing that I'm really interested in. Dollar yen. Yeah, so I'm long dollar yen as well. I've got no problems buying dollar yen. I mean, like I said, I'm already long. I'm holding 2 positions. So I think really dollar yen is just a case of looking to be a buyer. Yes, we've seen dollar weakness, and we've actually still got dollar weakness. We did see the interventions, but there's just nothing that really changes my mind here until we get policy change. So, whether that's the Bank of Japan hiking rates a bit more aggressively, the Fed cutting rates, the yield gap remains, and the interest rate spread is still there. So really the dynamic that we had, throughout this period is still completely, nothing has changed. So yeah, I would be very happy just continuing to buy. When we start approaching 164 again, I would start getting a bit cautious. This could be the new line in the sand. As we've seen previously, the MOF typically likes to defend one level until they kind of give up and move on to the next level. So that was around 160. You can see, we had 160 is quite a major level of resistance here on the daily. We saw interventions around this level as well. And then the market continued to just move higher and higher and higher and correct every time they intervened. So it could be a similar situation here where we, have a little bit of a sluggish period, revert back towards 160, intervention again, and then correct, and then they give up and move on to, 166, 170, whatever it might be. But yeah, again, as I said, we've got the direction's not a concern for me. I am bullish on dollar yen, but it's really just a case of trying to find an optimal entry, and of course, keeping an eye on central bank policy. Okay, so right, while the chat's quiet, let me just open my what is this? A Sprite. Hold on. Gets very tiring talking for an hour nonstop. Need to wet the whistle. Right, there we go. Okay, let's move on. So what do we want to pay attention to? So US dollar CAD is still getting a bearish reading, which is interesting. We were looking at dollar CAD quite a lot over the past couple of weeks because there was a daily level that I was paying attention to right here. And I was wondering whether we could use this as a support. Again, the break, retest, continuation, where we're in a bullish trend here as well. So that technical idea made quite a bit of sense, but I didn't take it because the fundamentals didn't support it. So yeah, I would be very, very happy being a short seller here. But again, it's a case of trying to get some sort of entry. So I've drawn the fib from the high to the low. Obviously, where the low currently is, I'm sure it will probably end up going lower. But at the moment, this fib zone lines up with the previous structure on the left. So I really, really like this level. So if we can see some sort of pullback here, whether it be early next week or whatever, whenever it may be, I would take a short position here. Again, bread and butter setup. Edge finder's bearish. We've got the technical setup. The only real downside I see here actually is just the daily trend is still technically bullish. Although it looks like we might be heading here into a bit of an inflection point where they could potentially have the cross into a bearish trend. So I quite like that. But yeah, there's nothing to do just yet, unfortunately. What else do we have? The DAX is bearish. It seems like the Nasdaq's having a bit of a rough time trying to maintain a bearish score. I think it was bearish earlier in the week, then flipped back to neutral. And I think yesterday it was bearish again, and it seems to have dropped off back towards neutral again. So it's a little bit of a frustrating one because I really want to get a bit more heavy on the short side, but I can't really warrant doing that until we get a more solidified reading here on the edge finder. So yeah, we looked at the Nikkei. So let's have a look at the DAX. Let's see if there's anything there we could conjure up. Yeah, it's tricky actually. All timeframes are quite significantly bullish. I mean, actually, this daily time frame looks really good to be a buyer. We've got the higher low, higher high, previous structure on the left. Yeah, it's a bit annoying actually. I couldn't in good faith go short, even though the fundamentals are bearish. The way I trade, I need the fundamentals and the technicals to align. In this case, it's only the fundamentals. The technicals are actually telling me a completely different story. So unfortunately, I'm gonna have to scrap the DAX until we get some more price action development. The Russell, I'm not really interested in the Russell, but we can take a look. The Russell's not something I trade really ever. I think I might have had one or two positions in my entire career. Yeah, it's actually a similar setup to DAX really in terms of. Actually, is it? I might have been lying to you there. The daily looks really bullish. I mean, we've got a very clear uptrend here with the higher lows, higher highs type of price action, but the H4 is looking a little bit more bleak. We did use the 200 here as a bit of support. So, how can we approach this? Fib from the high to the low. I would say if we can see the Russell rejecting this fib level and end up closing back below with a bearish engulfing candle or just a bearish candle, it could be worth maybe taking a bit of a small attempt and just seeing how it goes. Now, I don't really like it. Again, we are trading against pretty much all the trends, so it's not ideal, but the fundamentals are bearish on the edge finder. There is the fib setup here. Again, it might be worth a little bit of a shot. We've got a little bit of a previous support here again, sort of backing up a break and retest as well. So I'll keep an eye on it, but it's definitely not something I'm overly bothered about at the moment. Pound yen. Pound yen. Let's see. So, yeah, I think pound yen kind of backs up quite heavily what I was already talking about dollar yen. There's not really any change. Pound yen is massively outperforming dollar yen, obviously, because the dollar is very, very pressured at the moment. But we do see, obviously, rejection of the 200 daily moving average. We've corrected very, very quickly and now approaching back to the previous high that we had right before the intervention. So I think pound yen actually is really, really simple. It's just a case of waiting for pullbacks and looking to be a buyer again. When it comes to trading yen pairs, whether it's euro yen, New Zealand yen, Aussie yen, pound yen, really any of them, I wouldn't really be looking to take profits at the previous high. I would be using dollar yen as a benchmark. So when dollar yen returns to around 163, 164, then I would start being very cautious on other yen pairs, because dollar yen is obviously the benchmark that is used for interventions, not things like pound yen or euro yen. So that's one thing to keep in mind when obviously trading these yen pairs. Actually, I've just noticed dollar yen is bullish on the edge finder. I didn't see that earlier. So that's interesting. I might be able to add a little bit more size onto dollar yen now, actually. I really like to see that. Although, actually, that's made me curious. So the US heat map was 18. So it's gone up actually slightly to 27. What's the yen? The yen must be doing really badly to be getting a score. Wow, I didn't even see this. The yen is really weak. It's got 14.29. So it just backs up what I've been saying even further. It's not just that we've got no policy changes. The fundamentals are really, really bad for Japan at the moment as well. So, yeah, I mean, fair game. Just buying, well, not buying yen, selling yen. James, our paper is public. So can you check? I'm sending you a link, my research paper. Where can I put a link? Where can you send me a link? On Instagram, just send me a message on Instagram. My name is James LNE 777. There's actually a link to my Instagram on my YouTube video. So if you go to my YouTube channel, click on like the most recent video, you'll see a link to my Instagram. Just send it on there. What about Nasdaq? We just covered Nasdaq, although I'm going to assume you said that before I did look at it. Okay, so yeah, when it comes to the US markets, I think we are, I've been harping on this idea a lot, but I would say we are definitely in for a downturn. And I don't want to be a doomer. I'm not sitting here trying to say, I think the Nasdaq's going to crash by 40, 50, 60%. But it wouldn't be a huge surprise to me if it did happen. Now, it's super easy for people to sit and say, oh, we're in for a crash. The crash is coming, sell everything. That's not what I'm trying to do. I'm not trying to fear monger or anything like that. But, it's the same thing I've been talking about with the fact that I think the optimism around AI is massively overdone. Valuations are absolutely insane. So I heard yesterday, I'm not sure how true this is, but I did hear yesterday that Anthropic is either going to try to match SpaceX valuation or even surpass it. And I just don't think either of the companies are worth that much. I think SpaceX was an incredible increase. What was it, like a 50 or 100x increase on the valuation? I'm not sure exactly what it was, but it was just nuts. And if Anthropic's going to do the same thing, I think we're in for a world of pain at some point. And again, when that will happen, I've got no clue. It could happen next month. It could happen in 2 years. It could happen in 5 years. I don't know. But again, if we could start getting bearish readings on the edge finder for things like the Nasdaq, the S&P, specifically the Nasdaq, though, obviously for the tech sector, I think being short would be so good. But of course, it is very difficult to short those markets. I believe WTI may break structure on the 1 hour to the downside. Right now it's retested down trend line. On the daily, it's been rejecting since yesterday. Okay, let's have a look at your idea. Actually, hold on. Is oil still bearish? I know oil was bearish at one point. No, it's dropped off. Okay. Where's oil here? So you said the 1 hour time frame. About to so I'm going to assume you're talking about sort of this idea here. If we get a break lower, you're looking to go short. Yeah, I mean, we kind of covered the same idea yesterday. I get it, but it's just not something that appeals to me in any way, really. So I like the level. I see what you're looking at. We've got the uptrend here, break the level. Technically speaking, yeah, downside would be expected. The way I trade, though, is trend following. So the moving averages are still bullish. We are in this bullish trend. Even if we create a lower low here, we would still be bullish because of the moving averages, as far as I'm concerned. On the higher time frames, we're kind of in no man's land. There's just really not much going on here where price currently is for me to be interested in any way. I'm also not really optimistic on the Middle East situation either. And something to keep in mind is we are heading into the weekend, which is notorious for new headlines coming in. So whether it could be de-escalations, which is positive for your short idea, but it could also be escalations. So yeah, I would be very, very cautious being involved with oil, especially over the weekend. Oh, pound CAD. Yeah, you asked for that earlier, I think. I apologize. Completely forgot about pound CAD. I'm still in a position, I think, which is about to get stopped out here. Let's just see. Is it still bullish on the edge finder? If not, I really should be out of this trade. But again, because I'm away, it's been a bit annoying to keep up with everything. Yeah, so pound CAD is dropped off the edge finder. Let me use a fresh chart so we can just start fresh and do some reanalysis here. So because there's no reading on the edge finder, automatically I've actually pivoted back towards being neutral on pound CAD. So that means I don't have any real direction here. We are kind of in this wedge pattern, I suppose. What would I want to do here? So based on just technicals, again, forgetting the fundamentals because there is no fundamental driver, I would be looking for a break of this level, retest into this support, and then continuation lower. That's really as simple as it goes, and that's kind of all I've got for you at the moment because, again, there's no fundamental driver. But yeah, that's about as far as I can take that one. Quang, yeah, I'm working on some tutorials and things, but it's not made for with the greatest of respect, and this isn't meant to be like a disrespectful thing, but it's not made for normal sort of traders. It's made for people that are interested in really digging into context and things. But yeah, there's some tutorials on the way. The daily downtrend is the major thing. Wait, hold on. The daily downtrend is a major thing. It's been tested yesterday. Yeah, the thing is, I don't see the same thing as you. So you're saying a daily downtrend. I still view this as a daily uptrend. Oh, wait, hold on. That's pound CAD. Sorry. Look at the wrong market. Let me just pull up oil. Yeah, here. So yeah, this is still technically an uptrend for me. I understand, again, I get what you're looking at. We've got these lower highs, this trend line. I get it. I've got it drawn up as well. But when I say I'm trend following, I really just use the moving averages. So a 200 and a 50, and that is what gives me the trend. So here, the fact that these are side by side, we've got really not much going on within this sort of zone here. It kind of just tells me to stay away. It's a little bit more range bound, a little bit more unpredictable. So yeah, as far as I'm concerned, I personally don't see anything here, but it doesn't mean that your idea doesn't work or it's not valid. It's just, again, the way that I look at the markets. I didn't say that, Quang. That is not what I said, and that's not what I meant. Oh, wait, that's what Prizak said. Yeah, fair enough. You just saw gold at 4,600, looks overextended. I do agree it looks overextended. Yeah, we are around 4,600. Let's see. Yeah, I don't mind it, but as I said earlier, I just feel like we could come towards 4750. Just because that's kind of the next level. Although now I'm looking on the H4, actually, I suppose we do have this sort of resistance level as well. Yeah, I see it. I get it. Personally, not for me. I'd rather not try and sell the pullbacks and actually just buy on the pullbacks. But yeah, cool. Fair enough. I mean, what am I supposed to say to that? New Zealand US dollar. Okay. Actually, let's just see. What does the edge finder have? I don't think we have a New Zealand US dollar reading, do we? Okay, so let's have a look at the scorecard and see exactly what's going on. Yeah, score of 3. Yeah, not meaningful by any means. And again, I think, we already looked at this market. I've just remembered. Yeah, so this one comes down really, in my opinion, to opportunity cost. And it's not a case of, I don't think this is a good trade. I would still be a buyer. But the fact that the edge finder has things like Aussie US dollar, Euro dollar, pound dollar, all reading bullish, whereas New Zealand US dollar is neutral, I would rather look at a different market for a US dollar exposure. However, as we looked at earlier, I'd take the fib from the low to the high, and I would be looking for a potential entry on this fib zone because it lines up with the previous high. So this gives us the break of the high, look for a retest of the high into the fib, and then continuation higher. That's really as simple as it goes. I don't see anything else here, to be perfectly honest with you. So selling gold at these levels is like catching a falling knife. Not gonna lie, no matter how extended it looks. I somewhat agree, but I also don't agree at the same time. I don't like to do that. I get why I get the falling knife analogy. I would tell most traders to avoid it, or I would suggest most traders avoid trying to do it. But what you also need to understand is some traders are what you call a mean reversion trader. So a mean reversion trader is very similar to what we looked at here. When a market gets overextended or away from what people would consider a fair value, they counter trade the trend to get the market to go back, or expecting the market to go back to its fair value. So that's more of a experienced trader's approach. I'm not saying you're not experienced, but it's very difficult to do. It's a lot more tricky than trend following. And you also need quite large bankroll, because normally if you're doing a mean reversion approach, you also kind of have to deploy a DCA approach as well. Not have to, not every time, but typically if you're doing mean reversions, DCA is kind of hand in hand. But yeah, again, it's very tricky, and I wouldn't say it's an easy way to trade for especially new traders. Do check out Bitcoin. It's been skyrocketing 67% today alone. Is it? Wow, I might need to check my ledger. I wonder how much I'm down on Bitcoin. Oh, wow. That's a hefty move for sure. Yeah, okay. So what I'm seeing here, rejection of the 250, rejection of the weekly 50 moving average here. A little bit of a problem. I don't like to see that. The daily does look very bullish, but again, taking into account the weekly moving average, I wouldn't want to be a buyer right now. The H4 looks okay. Let's go back to the daily for a second. So what I would want to see in order for me to actually be interested in Bitcoin is I would need to see a fresh high get printed, take out the previous high, then a higher low get printed, and then continuations. Then I could draw the fib from the low to the high, look for around a 50% retracement, and then I could get in. Once the market's proved, buyers have stepped in. But after the major downside we've had on Bitcoin over here, I wouldn't want to try and front run it. So I would need to see it prove that it is actually bullish, and this isn't just a one-time bullish print. Should we sell? Should you sell what? I don't know what market you're talking about there. So also New Zealand CAD pretty bearish on the Edge Finder. Let's see. Oh, I've got a bit of coffee left. Oh, lovely cold coffee. Okay, so we do have bearish reading for New Zealand CAD. You're all right. Let's take a look. Yeah. So actually, what's interesting is I think we were looking at this market not too long ago, and one of the big problems was obviously this resistance that we've got marked up here. Now, the issue here is, yes, the Edge Finder is bearish, but the technicals here for me are very bullish. We've got these higher lows that are continuously getting printed, following this trend line. The daily moving averages here are bullish, so that's a bit of an issue. And then, of course, we are very close to this resistance level. So being short does make sense again on a fundamental side, but the technicals are tricky. So if we see a rejection here, if we draw the fib from the high to the low, we're currently in this fib zone. So if we see some sort of bearish closure outside, maybe front running some sort of short position could be an idea. It's quite aggressive, but I get it. Relatively tight stop as well. The high is quite close. And if we end up breaking out of this trend line, I could see quite significant downside to come. So yeah, I like it, but I would say it's just a little bit messy. It's not ideal. In this case, it's exploding like a rocket. Yeah, Bitcoin's done fantastic. Mean reversion DCA is only valid when fundamentals align, but technicals don't. Yeah, in some cases. There is also, higher time frame DCA mean reversions, like on a weekly time frame, that can work even if fundamentals aren't aligned. Because obviously, if you're trading a weekly time frame, there's a lot of time for fundamentals to shift. Again, it's not something I do. I don't know that much about it. I do DCA short to Eurodollar, but It's not really mean reversion. It's more just swap benefit. Well, I suppose it is mean reversion, actually. But anyway, it's not on a weekly time frame by any means. Fundamentals are very strong for gold. They are indeed. Simo, good to see you, my friend. Hope you're well. Insights on pound New Zealand. Let's see. Oh, we did already look at pound New Zealand, actually. Just realized I've got 10 minutes left. Well, the stream's gone really quick. Okay, so pound New Zealand doesn't have anything going on. I'm fairly sure it is bullish here, yes. So pound New Zealand is bullish on the edge finder with a score of 5. Fantastic. We've got that in line. The issue is, sorry, my dog's walking over. I thought he might make an appearance on the camera. I don't think there is one around here. No, they're all over there. Okay, anyway. Pound New Zealand, bullish on the edge finder, but the technicals are just disgusting. So what we were looking at is obviously the fib here from the low to the high, wanting to see this pull back into the previous level of structure on the left, and then a rejection of obviously off that zone. We've not seen that. We did see an attempt to push higher and complete failure, and now breaking lower outside of the fib, which is obviously not a good sign for us if we want to be buyers. This is also a daily time frame. So what we're kind of seeing here is just a bit more of a larger range. So we've really not got any direction here. We've not had a breakout to the upside. There's no breakout yet to the downside either. So I just do not see any option to trade this market right now. There's just nothing that is going to trigger me in. DCA forward swaps. Yeah, you know the source. Although actually I was short DCA euro dollar last week and got stopped out this week. That was a bit painful, but it is what it is. Swiss yen on edge finder. Of course. Bear in mind, or keep in mind, you can use code ELITE for a discount. It's right here, code ELITE for a discount. Gives me a little bit of a kickback, and it also, again, gives you a pretty good discount on the software. So it's definitely worth it if you've not already got it. And free course, by the way. Recently, I will show the Swiss yen. Sorry, I'm just getting a bit sidetracked. Recently, I've seen a lot of messages, more than normal actually, in the chat about learning fundamentals. And I'm always saying go to the A1 site, and I've not got the link on hand, but you can scan this QR code and you can get a completely free course on fundamentals and macro. I don't think there's no upsells or anything as far as I'm aware, so I would 100% suggest it. What are we doing? This is the problem. I go off on little tangents and completely forget what I was actually trying to do. Swiss yen on the edge finder. Let's have a quick look. CHF. Oops, CHFJP. CHFJPY. There we go. Score of 8. So actually, I don't like this. I'll be honest with you. Economic growth is bullish, technical is bullish, sentiment is bullish, but jobs market inflation, not so much. I'm not sure why it isn't loading. Let me refresh it. Hold on. Bear with me. There we go. Okay, so when I'm looking at an edge finder reading, it's not just a case of if something's bullish or bearish. I also need to see what's actually making the score, because I don't personally, this doesn't mean you don't have to, but I personally don't really care too much about the sentiment or the technical. I like COT data is like a nice confluence. I do care about it somewhat, but mainly I like to see these three pillars. Again, these are essentially the three main categories of an economy. You've got the growth, you've got the labor market, and you've got inflation. In this case, actually, 2 of the 3 are bearish. So I don't really like the whole composite of this score. It doesn't mean it's not going to work out. I'm sure Swiss yen will continue higher, but it's just my personal approach to fundamentals. I like to see the core economic drivers, which again are the 3 pillars, and then the other 3 on top. So that, you've got technical, institutional sentiment on top to confirm it. In this case, not so much. But yeah, that's the edge finder for you. For who asked for that? Young ST, whatever, young guy, you asked for that. So there you go. Thoughts on dollar Swiss? Right, I've got 5 minutes left, so let's speed this up a little bit. Come on, Wi-Fi. I need to speed it up. I just said. Dollar Swiss, very bearish on the edge finder. Let's see what the technicals are doing here. A little bit dodgy, actually. Daily time frame has flipped bullish, which not great for our bearish idea, although we are in an overall bearish trend over here, quite significant. Recently flipped. However, seems like we are attempting to break lower again. So this could be a little bit of a shorter term trend change before we continue on the longer term downside. Weekly time frame is very bearish here. You can see, over the past couple of years, the behavior has been that we fail to break above this 200 moving average. So this could be quite a good opportunity to actually get short, continue this weekly trend, benefit from the Edge Finder's bearish reading. I do like it. I think this could be a very, very good opportunity, actually. Let's just see. If we take the fib from this high to this low, kind of a fib pullback as well. I do like it. So in terms of actually getting an entry, might be quite tricky though, because I don't want to stop up here. Keep in mind, this is a weekly time frame, so this is a large stop. So I think what I would have to do is actually reduce the stop to just above this weekly high, and then just let this trade run. Something else to keep in mind is dollar Swiss is negative swap if you're selling, so it's not a free trade. So if this trade doesn't work out and it ends up range bound, or it starts heading towards stops, it's worth just cutting the trade rather than sitting through negative swaps and also taking a loss on the position. Inflation is one of the top components. Absolutely it is, yeah. Laying out the FOMO rug. Yeah. When you fib exit on 0.618, a high chance of a pullback point before resumption. Yeah, that's kind of what I go for. Do you think gold is a good long today? No. I think gold is a good long as a blanket statement. However, the problem is today, sorry, I don't know if you can hear the cat meowing in the background. The problem with gold is it's already had a significant move to the upside. I wouldn't want to be buying it right now. I would actually just wait for a confirmation of a pullback. So once we actually start seeing gold moving to the downside solidly, if that's the right word, then I would be looking to buy on some sort of, whether it comes back down here, retest previous structure, and then continues higher, whether it's a fib pullback to a moving average, I don't know. But I would want to wait for a pullback rather than buying it here. You've already missed, how much of this move is it? Let's just see. You've already missed 14.5% of price movement. It's, with very little pullbacks in between this whole run. So I would say you are buying into quite an already extended market. Doesn't mean it can't go higher, of course. That's just my view. Now do the FibX on gold. I'm not sure what you mean, Mega. At TraderNick, Bitcoin is showing no sign of stopping. It keeps moving higher. So should we get in or wait? My friend, it's just like the guy that asked about gold here. The problem is you're late to the move. You need, as a trader, you need to be able to forecast these types of ideas. So the issue now with Bitcoin is, do you want to buy this? So let's say you were like pretty much all other retail traders that see something move to the upside and you want to get in because you've already missed quite a large portion. You think it's going to go higher. Okay, well, now you're stuck in a position like this. Or if you buy it here, the likelihood that we actually get a larger move to the downside in a correction or even just a deeper retracement is very high before we actually do continue higher, if that's what Bitcoin's going to want to do. So buying into this is a terrible, terrible idea. Again, it doesn't mean it's not going to work. But if you see moves like this all the time and you're always trying to buy into them, I just do not think it's a good idea. It's not wise. So that's just my 2 cents. I just think it's a little bit of a FOMO approach rather than it being an actual strategy. If the 84K and 81K zone didn't hold, 50K might be a bit hardball out. Yeah, we'll see. I'm not a Bitcoin guy, so I'm not sure on its typical behaviors or anything, but I would expect the fact that gold is doing very well. I just have a feeling Bitcoin is in for a little bit of a redemption period. And again, I'm not a Bitcoin trader. I don't really have anything to back that idea up with. It's just kind of the vibe I'm getting from the markets at the moment. Are we getting a pullback in gold? I don't know. I don't know. I would imagine yes at some point, but as I said earlier, it could be today, could be next week, could be in a month. I don't know when that will be. This is where you've just got to have patience. Unfortunately, I know patience is annoying. It's one of the worst things about trading, but it's it's the most profitable approach as well. Anyway, ladies and gentlemen, we do have Alan Perez coming to take over the stream. Guys, stay safe. Enjoy your weekends. Enjoy the rest of your days. Thank you for being here. Stay safe. Don't get margin called. I'll see you all next week. See you later.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. How are you guys doing today? We are getting close to that weekend. What a powerful and volatile week it was. Hope you guys are doing fantastic. Go ahead and check out that offer too. 8cap is offering a 20% welcome bonus for a limited time. So if you are in the market for a new brokerage, 8cap might be the one for you. But hope you guys are doing pretty well. Hello, Simo. Good morning to you, my friend. Hope you guys are all well. What are you guys looking at today, guys? I'm looking at good old gold up almost 2% today. Man, oh man, am I feeling what you guys have been feeling? The FOMO, right? The amazement, the wow. This thing is doing what it's doing. Awesome to everyone that is in the trade. Hope you guys are doing well with it. I'm going to be waiting for pullbacks. It's going to be annoying because this thing could continue to run up, but I'm going to wait for some pullbacks here. So the level that I'm looking for is the closest level that I can see right now is 44.40. So right around over here, that is where I am looking at. So a pullback back into this level right here. That would be okay for me. But again, it may happen. It may never happen. Who knows, right? Who knows? But this level right here, this pullback on this recent leg is the 61.8% retracement level. So that's what I'm going to be waiting for. Other currencies or other trade setups that I'm looking to take that may give me a pullback faster than gold. Dollar Swiss is one of them. In fact, dollar Swiss went ahead and got very close to that 38.2% retracement. We pulled into here. Didn't quite tap into that level. You can see I have an alert right there. And we are continuing lower. So hopefully there is some dollar strength in the short term that allows me to get a pullback into this market. And then I can go ahead and continue shorting. That to me is like my next best trade setup is dollar Swiss. The Swiss franc got very strong when we had the whole bond market chatter. So I really like this one too. Euro dollar, similar situation. I am just waiting for a pullback. Let me go to the actual chart that has the limit order. With euro dollar, I am just waiting for a pullback into this 200-day moving average, which again, we're not too far away from it, right? Like gold. So I do think that we can get a pullback and get an opportunity there. But it's just a matter of being patient, guys. We already know the bias that we have. We already know kind of like where the flows are going. We already know everything. We just got to wait for the pullback, right? So it's just a matter of being patient and then executing when the time is right. The Lincoln says, I took some small profits on gold and silver last Friday. Pretty happy right now, dude. Awesome, man. See, yeah, just be happy about it, right? It's going to come back. I always tell myself because I do feel FOMO sometimes. Don't get me wrong. Like I definitely look at stuff and I'm like, dang, like I should have done this or whatever. Markets are always doing something. They are always doing something. There's always an event of some sort that's going to come around that's going to give you lots of volatility. And so if you miss this one, then just wait for the next one. And, you know, in 2026, there are so many market themes that just kind of pass through all the time. So you'll definitely find something. So I'm just going to be patient here. I'm going to take this as like, you know what, I get to see this thing run up. I get to enjoy myself and relax and not be stressed out, you know? So that's what I think with gold. The Lincoln says, I want an actual retracement too, but we don't seem to get one. And almost most of the movement seems to have happened after hours. Hey, man, that's okay. That's okay. Um, you know, when you have a big move up like this, eventually, one day, we don't know when, but one day, there will be some kind of a meaningful retracement. And because we would have been waiting on the sidelines, waiting for it to happen, we'll be ready to act when it happens. Emergency, Japan and the UK are selling, Japan, UK, and China are selling US dollars. Are they? Let's see. Is that a headline here that I should be paying attention to? This is old. Let's go to my news. I did see this though, guys. What do you guys think about this? President of, I'm not going to say that country's name, Iran should end the war now that it is in a position of strength and the world acknowledges its victory. Do you guys think that's going to land? Do you guys think it's going to stick? Is that a possibility? I will say though, if it is a possibility and there is an end to the war somehow where they both claim victory in their own ways, dollar down for sure, and gold up for sure. So we'll see. Exactly. At least when we have a pullback, we'll have a target. Yeah, a higher target, right? We'll have previous structure that we can target. So, like if you get a pullback, let's say the pullback happens right now and you'll pull back to 4,200, right? Well, at least you can have a target set in stone saying, you know what, 4,600 is not off the table. It's, we've got there before already. So I do like that point you have there, Ron's, for sure. But what do you guys think about this right here? Iran should end the war now because it's a position of strength. You guys think the war is going to end anytime soon? Let me look at oil. I haven't looked at oil at all. What does oil say? Oil's up on the day. Oil says, nah, it's not going to happen. Yields are lower today, though. The 2-year is lower, which is good for dollar softness. And the 30 and the 10, the 10 specifically, the 10 absorbed all of its decline on Wednesday. Wednesday was that bond market day, right? This was this candle right around here. Yesterday, the 10-year yield swallowed it all up. So that's interesting. So it seems like the market really, the 10 specifically, is calling a bluff a little bit. The 30, not so much. But again, still sticky rates, still have structural problems that are not going to help this unless they get fixed, right? Like I made a video yesterday about Bank of Japan. Japan went ahead and intervened on a super weak Japanese yen. It hit record lows, similar to how the 30 hit record highs, right? The yields. And I made this kind of example like, Japan intervened, but then it was all walked back. And why that was because the structural, forces going on underneath didn't change. You still have a pretty wide interest rate differential. So, the intervention was just like a band-aid on a really big wound. So similar with this, you can have an intervention, a verbal intervention from the Treasury, but if you still have really concerning U.S. debt, if you have the war in the Middle East going on, you have all of these things, this unconfidence in the Fed, if you still have all of those structural, headwinds, right, then that's going to continue to fuel this to the upside. So that's why I'm like, it could very well be very short-lived. Now, I will say that the Treasury did say that they have basically the ability and willingness to up their spending on the buybacks from 2 to 4 to like 4 to something greater than that. And maybe that's significant enough to kind of tame this. But again, it's like anything. If the structural dynamics underneath are still there, then this right here, this intervention will be short-lived. Similar to what we're seeing with dollar yen here. So, ball out. The ball out or the buyback move was completely erased on the 10-year. So that's what's going on. 40 trillion in debt, 48 trillion other, 15 trillion on Japan net. Yeah, man. Yep. I will say, like the question for me is like, at what point does the market start to freak out? I look at the 10-year yield and I still see nothing crazy, right? I still see this on the 10-year chart. You do have this spike here, but I still see this. So I'm like, okay, nothing horrendous or whatever. But if you do start to break out again, 4.9, 5% on the 10, then yeah, concerns are there. And then for the 30, I have no idea because we are at record heights. So that's a different story. The 30 is a different story. Kyle Martin. The war's over. Haven't seen a missile in Dubai in 3 months. This is just smoke and mirror now. Interesting. That's very interesting. One thing I like about the Discord is that we have so many people, so diverse, different parts of the world, and a lot of people. Some people were like in Kuwait and Dubai, like Kyle Martin says. So like they've had real like relevant, tangible experience for what's going on in the Middle East. But we'll see. Ball out disagree. Ball out says war is not over. Bro's reporting from ground zero. I'm gonna say that gentleman in ground zero, I'm gonna take his word for it. What's my take on crude oil? I think let's look at crude oil. It's it's bearish, but with lots of risk to the upside. That's what I'll say. That's the best way I can describe it. It's bearish, but it has a lot of risk to the upside. If something happens, right? Like you can clearly see um, oil trending lower, right? Look at this, trending lower. You also have this right here, this bearish trend line that's holding up quite nicely. You are testing it right now, so be mindful of that. But you have a lot of technical structure. You even have this level right here, which was previous support, turned into resistance now, as of now. So the chart is pointing to the downside, but you do have something looming around in the clouds, and that is going to be the Middle East stuff. So if something really pops off over there, then you do have oil make one of these candles. And the tricky part is you can't even predict when that's going to happen or anticipate. It can happen anytime. So that's the thing with oil. Unless you start to see like some clear structural changes, then like the confidence to go short oil increases. But until then, you just have this thing kind of looming around that I would not want to participate. I will say though, if I was like seeing a super big discount on oil, like 64, 65, I would probably buy it just because you still have that risk to the upside. Are you still in euro and gold trades? I am not, man. So on euro dollar, frustrating enough, which Chris Bulver said this, but you're like never happy in trading, right? So like I got some pretty good profits here on euro dollar 200-day moving average, right? So when the bond market stuff happened, I was away from my phone, and this thing just pops higher and it just took me out. It hit my take profit level. Had I been aware of the situation and been at my desk, I probably and would have seen the reaction. I probably would have just raised my take profit level or just has seen what happens here at the 200-day moving average, how it reacts to price. But that didn't happen. So I just got took out and now it's continuing to run without me. Gold, similar situation. So right before that announcement, I actually I experienced a pullback, which was this right here. Price pulled back here and I had my take my stop loss at break even. So I took profits on Eurodollar, which I should be happy for. But because I know that I could have got more, it's like ugh. And then I got taken out for break even on gold, and then just seeing this thing continue to run up here. That is kind of my situation. So I'm out of Eurodollar, I'm out of gold. I did manually take off dollar Swiss, which dollar Swiss was good. And that reason is because I'm waiting for a pullback into this level and then continuing shorting. But that's the thing, guys. A lot of people think trading is like super fun and super cool and everything. You're like never happy, man. And I say that funny. Like I'm pretty happy, but it's like you always have those thoughts like should have done this, could have done this, and it's like you can always improve or whatever, but you'll never do it right. Prizark says, how you know he's not a Mossad agent? Hey, I don't know. I guess I don't know. Someone says USA emergency oil reserves will end in 10 weeks. Aren't we getting a lot of supply from Venezuela now, or some supply? The only thing with that is like it's harder to refine. It's not like pure, and you have to build a lot of infrastructure over there for that to translate. So I guess not. Gold bear market is over, dude. For sure, man. We've been saying that on the channel. If you've been watching the live streams, if you're new to the live streams, by the way, if you're like a new viewer, definitely go ahead and subscribe, like the live stream. It really helps the algorithm push it out. Actually, I will ask this, guys. If you guys can just take, I don't know, 5 seconds of your day, go on your YouTube platform or wherever you're watching, and just hit the like button for the algorithm purposes. That's it. Just one time. Just hit that like button. It'll help push the live stream out. So when people type in like trading live stream or whatever, we'll be at the top of that list. That'd be much appreciated. Yeah, please. Let's see what else. USD future looking grim and dimmer by the day. I mean, that's what the day has been telling us, man. Ron says Ron's in a similar boat. I closed my GU and NU trade before FOMC. Then the buyback happened. That's how it is, man. That's how it always is. And hold so you're holding Australian dollar. I would imagine that's doing fantastic. Yeah, look at that. AU, no pullbacks, straight line up, similar to early of 2026. Here's what I'll say. This is kind of a level I'm watching. I'm not saying that it's gonna fail or anything like that, but we reached this level in the past, and you've had some kind of a stall out or a level of resistance. So I'll just be looking for that there. I say this to say I am looking for pullbacks into the US dollar, so short-term dollar strength. So I wouldn't be surprised if you see AU hit this level here, have some kind of retracement of some sort. Don't know how deep it is, but some sort, and then continuing higher. So that's what I would say with AU. Let me just measure it out with a fib too, see what it looks like. Let's say hypothetically we stop right here. So I'll pull back into the 38.2% retracement level. Looks quite nice because you also have this structure here to the left. So if you just look at this horizontal level right here, so that would make a lot of sense. So if AU pulls back into the 38.2 at 0.70733, right around there, I like that. So I'll be looking for that. So we'll see what happens with AU right here at this level. And I'll look at that level for my sake too. If you look at the daily chart, silver perfect short. Ooh, that's a tough one, man. I was actually you're kind of right though. The technicals look good for a short. I wouldn't short it though. You have a strong metals market right now. But I see what you're seeing. Okay. I see what you're seeing. You're seeing this right here. So this was previous support, right? Turn into resistance here when you had this dip, pull back into this level, and continue lower. So I see that. You're also seeing this right here. So we're tapping into that level, and you also have the 200-day moving average right there. So here's how I see it. I think that the metals are bullish, right? So in that case, if I were a silver trader, I would be waiting for two things. I would be waiting for a break and retest of this very solid level. We can all agree that this is a very solid level, right? You have, previous support, turns to resistance. So if you break it and retest it, it turns into support again. You also have the 200-day moving average. So very, very strong level. So I would wait for the break and retest on that, or I would wait for a pullback, right? Pull back into some nice level and then continue it higher. Here's what I used to do all the time. I used to say, and guys, stick with me here and let me know if you guys have ever thought this way, okay? Like let's be real with each other here today, right? Let's say I am waiting for a pullback to this level, right? Let's be real with each other, right? So we're tapping into this level and I'm waiting for a pullback, right? I like this level 62. So I would say to myself, well, I'm gonna wait for the pullback. You know what? I might as well short this into the pullback, and then I can repivot and go long, and then I can just double dip, right? How many of us have done that, thought that way? Type one into the chat. If you said I'm gonna trade the pullback and then just repivot and then go to the other side. Let's be real with each other. Because don't get me wrong, this looks like a solid level. Support, turn resistance. You have the 200-day moving average as well that could act as resistance, right? BT says 1. Yeah, right. So the problem with that is that if you were to do that short into the pullback and then repivot and go higher, is that you don't know if the pullback's ever going to happen. You don't know if it's going to happen. And so if you don't know that and you short because you want the pullback to this level, well, what happens if it just keeps going higher and higher and higher, right? Then you're stuck in a trade. So stick with the trend, stick with the momentum. If silver's to the upside, you either wait for a pullback or wait for a break and retest. But when you commit to something like this, you're going against the tide, and then you're just going to be frustrated, right? Exactly. And then Lincoln said it right there. And then you just end up missing both sides. You end up missing the short, right? Because you're bleeding as this thing's moving higher. And then when you finally take off the trade, you have no more ammo, or you're just like, you know what? Whatever. Kier says, before I used to, not anymore. I used to all the time too, man. Don't get me wrong. There's like a human psychological thing that happens that when you see a chart that's moving higher, like when you see gold moving higher, something in our brain says fade it. I don't know why, but something just says fade it. Maybe because it sees so much potential to the downside, right? Maybe that's what it is. But there, the easier way to go about it is just continue to write it out, man. Celtic says, I've done that and gotten smacked for sure, man. It's not wise. And then two, let's say you do that approach, right? You short into the pullback and it works out and you like got 2 trades in one. Then your brain is like, oh, that works. That's like a profitable strategy. And so like next time you're going to do it and you keep doing it. And then one day you're going to do it with like big size and then you're going to blow up. And then you're going to be like, oh my gosh. Just because we wanted to do that and get a better entry on the pullback. Mm-hmm. Ken says, why would he be stuck if he took a silver short? He would just stop out if it goes higher, just in stop loss. What's the big deal? Well, Con, the big deal is like the way I trade and the way I think most of us do is, follow the trend, follow the macro. So like when you were like, if you were to hypothetically short this, you would be going against that. So you're going against your principles of your strategy. So that's one thing. And then two, you're right? If you short this is just another stop loss, right? Stop loss or whatever. But that's just an unnecessary stop loss that you could have avoided, right? Like we're in the business of like every stop loss is a bit business expense, right? You can think of it like that. So like if you can minimize your expenses, you would do so, I would think. So that's why I say that. And then two, psychologically, most people, let's be real with each other, especially when they're newer, when you are in a losing trade, you do not let it hit stop loss. You either remove the stop loss or change it from 74 to 80 and a trade turns into an investment and you wish that it turns around and never does. Right. So that's what I'm saying. Like just following that framework, although it may be hard to do so, like practicing the patience, there's lots of good things that come from it. Right. Unnecessary big losses. You're not stressed out, things like that. And you're just, teaching yourself and holding yourself accountable to just follow the trend and wait for it to happen. And if it doesn't happen, it doesn't happen. That's not a bad thing. Yeah, it's going to build a bad habit. You're going to have a false confirmation and think that that's the way to go. What Alan just defined as otherwise called exit liquidity. That's one way to say it, sure. I think everyone learns that the hard way. Khan says, I respectfully don't agree. I have a 0.5 to 1% stop loss. If I believe in an idea, I'll take it. Well, Khan, I would say that you are in the percent of people that, has approach that you've determined works and you stick to your risk management. And so that I can definitely respect. I'm talking to the individuals that, haven't really got there yet and they're over risking or whatever and they want to get creative with it. But if you have controlled risk, defined risk for every single trade, then stick with that. The Lincoln said I'm locked in a couple thousand investments right now. Yeah, man, that's I've definitely done that. You know, when you turn a trade into an investment, that's when you know you're cooked. Yeah, not a fun time for sure. But Lincoln learned his lesson. There you go. Analysis on USDCHF. I will do that for sure. And I think someone else asked for a Swiss franc analysis as well. Um, Here's why I think the Swiss franc got really, really strong relatively to everyone else when you had that bond market talk. I think it was just the next best thing. So if we go to, let's go to Edge Finder real quick, and we'll go to the macro scanners equal surprise index, no, equal strength index. I'm sorry. You can see here that the Swiss franc actually surpassed the US dollar right here, which to me, I'm like, okay, you know, if money's going to flow somewhere, it's going to go into the Swiss franc. So I like that. From a technical perspective, too, this is what I like to see. So you had this chart is very, very clean. So with Swiss franc, you've had pretty much a range bound chart, right? You have this level of resistance right here, very obvious, and then you also have this level of support as well. And so with me, what I did was I shorted Swiss franc USD CHF somewhere right here, and then I caught this move, and then we surpassed this level of support, but we haven't really retested it. So what I did was I took some profits, and then all I did was take a Fibonacci retracement level and just measure the move out, and then look for potential opportunities where I want to re-enter the trade if we do get those pullbacks, right? So similar to gold, I know I want to be long gold. I'm just waiting for pullbacks. With USD CHF, I know I want to be short. I'm just waiting for a pullback. So for me, I have the 38.2 in mind, and also have the 50% retracement level in mind, or even the 61.8. So if we get to one of these levels, I'm looking to short this and continue to the downside. And then just one level that I have as a take profit would be this level right here, 0.79200, which is where that 200-day moving average is at right now. So to me, that's kind of like the way I would go about it. I'm personally waiting for like a 50% retracement for USDCHF. I think that would be good. And you are seeing some kind of a recovery today and yesterday. So I think that it could be possible that we see some dollar strength, you know, in the short term for whatever reason. And ultimately, I'm looking to fade that, right? And that kind of correlates too with what I'm thinking with DXY in general as price action, right? We had some strong levels of support that we've broken past, right? So this one at 99.5. Then you have this 200-day moving average as well. You had a solid follow through to the downside. Now I'm just waiting for a pullback, and then seeing how price reacts, right? So if you get the pullback into the 200-day moving average, and you do have sellers step in and take it lower, then to me it's like it's just confirming that this is a pretty solid bear market for US dollar. So I'm going to be looking at that as well. And that's pretty much where I'm at with all of my prospective trade setups, right? Euro dollar, I am waiting for a pullback, right? I'm waiting for a pullback, and I'm waiting for structure to hold and tell me that there is strong enough demand here for euro dollar to take it higher. So I'm looking for a pullback on euro dollar into that 200-day moving average, right? USD CHF, like I just covered, I am waiting for a pullback into this level here, the 50, to take it lower. And with gold, I am also waiting for a pullback, right? And I may never get it, and that's perfectly okay. I had my fun with gold, and I'll take it, and I'll be grateful for it. And also with euro dollar and USD CHF. So if I get them, it's you know good for me. But if not, it's whatever. Uh, let's see. What about 16Z and scalar? I'm not sure what that means. Does macro data support USD CHF short? I think the macro for Swiss franc is actually kind of neutral, I would say. I know a lot of the movement is due to just broader dollar weakness rather than outperformance in other economies. Let's go to Eagle Surprise Index real quick. So yeah, like I mentioned, Swiss franc is at 40%, right? Whereas USD is 27. So 40% is not the greatest or anything like that. But I think, you know, on a relative basis compared to US dollar and also to Equal Strength Index, it's the top of the list now, which before it was like second or third. I think that's helping out Swiss franc strength. Also, too, the Swiss franc, although it may not yield much, it is a safe haven, right? And so sometimes people, the trade-off is like either safety or more yield, right? And in times of uncertainty, they probably take the trade of taking more safety rather than more yield. So that's the story with Swiss franc. But yeah, Swiss franc doesn't yield much at all, right? But then you see this chart right here, USD/CHF, and look at this chart to the downside. So there's other forces at play. But all right, guys, I'm going to be back here in about 30 minutes or so. I'm going to pass the show off to Nick. So be back in just a second. Bye-bye.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Can you guys hear me now? Sorry, my mic might have been muted. I think we're good now. Let me know if you cannot hear me. Yeah, great session from Alan. Enjoyed it. And I'm feeling the same pressures or desire to be long gold that was expressed by Alan as well. And yet there's nothing I can do about it. Gosh, man, the comments have been a little bit relentless. I ain't gonna lie. People saying, Nick, you should have just, there's times to break your rules. There was one guy who was like, your trading rules are meant to be broken every once in a while. And I'm like, well, with hindsight, gosh, I wish I broke every rule in the book and went long gold with leverage. Chris, wouldn't have that been nice? Good to see you, man.
Hey, it's always easy in hindsight, dude.
Always.
How about Bitcoin? Good Lord.
Thing is flying.
I know.
Do you have any positions there or anything going on that side?
Of course, dude. I'm like my year-to-date highs are screaming because of my accumulation in both Bitcoin and gold. So they're doing pretty well. But I'll say this. I'm going to be a little skeptical on Bitcoin for just a couple of levels. Now, this could completely disprove me, and that would actually be a pleasant surprise. But I could see Bitcoin very much rallying back to this area, right around 80K or so. We come up to 80, and we either fall back down to the same 60K lows, and it just kind of neutralizes this enthusiasm, or we come up into this open space, and maybe that's a structure break where then if this actually proves we're higher, that break of structure could be like, okay, now there's a buy the dip, and we work our way, maybe back to all-time highs.
Yeah.
So it's very exciting to watch. It's certainly a nice recovery. In 3 days of trading, this thing has taken out months of chop from that 60K low, and it's certainly helping. And then gold at the same time continuing to push higher. And I mean, Nick, are we seeing just the dollar get slapped today? Yeah, I mean, there's good follow through from the dollar this week, and I mean, there's your correlated trade off.
So, I ranted on the phone with my dad for like 30 minutes this morning talking about the treasury world and what's going on with the bond market, and how, you know, to me, one of the most alarming things in the world, like this is my most bearish take, is the bond market stuff.
Okay.
Is you get that announcement, you have Scott Bessent, you know, going up on camera saying essentially we're sending a signal, we're going to support the bond market. And then the bond market shrugs. Like, would you not think that if you 2x'd and said 2x plus how much we're committing to buying back our own bonds, which, by the way, here's my, like, that's a trigger concept to me, because I'm sitting here, I'm thinking, what do you mean buying back? Like, when you say buyback, I think stock buybacks, where with free cash flow, companies that are profitable can buy back their own shares to support their shareholders. When you are talking about the US Treasury doing a buyback program on bonds, they're buying bonds with money they don't have in a system that is lending to themselves. Like, it's so confusing and it's so bizarre. It's like, and then you have this shrug reaction off of that. What that tells me is that bond investors are like, okay, so what? You're not doing anything different. You're buying back your own debt with printing more debt. It's like a very confusing. But anyways, I think that is why gold looks so attractive. It's like, out of all the noise, out of all the rain clouds and concerns about debt and Japan, and it's like, do I just want to have a portion of my portfolio stick it in gold?
Yes.
The answer is yes. And, you know, I have for some time. I know you have as well. From a trading perspective, I also want to be long with a tight stop, trying to catch some extra kind of alpha there. Have not had the chance to do so. Been a little bit frustrated on that side. But from an allocation perspective, you know, I feel like these things, there's always a case to be made for me personally, not financial advice, to keep some of my portfolio sitting there and just kind of protecting the blowout in the bond market risk.
Yep. And that's, I mean, I'm trying to think how long ago we started talking about this, Nick, but I think since last year, I'm like, I don't want TLT in my portfolio anymore. And I was like, I'm going to rotate into to gold instead. So yeah, I mean, and I don't run like a very traditional, like, you know, 60-40, not at all. In fact, I'm more like, I've got 58% of cash sitting on the sidelines. I trade a ton of options, and somehow I'm squeaking up to like 15% year to date, and it's looking better and better with this allocation I've been doing. It's like I might actually surpass 20+% this year, and do so with just a lot of trading, a lot of waiting, a lot of patience, a lot of out of the money, a lot of premium, but arguably positioned like pretty well, where it's like I just stayed out of a lot of the noise, period. You know, I traded all this stuff with gold and silver. I started trading way down here. You can see this yellow box. Like, I positioned a lot of my option trades down here. So now we're getting price moving higher. All of my option positions are getting further out of the money,
right?
Which is good. And that means that the time decay is working faster in my favor, and the probability of profit is increasing. And so I have a chance to protect. In fact, yesterday I just went through A to Z comb. I took 4 trades off yesterday for like almost 97% profit of my credits. And then I also have 20 more positions that are all at like 80+% of my max credit. So I'm going to ride those out a little bit longer. A lot of them are way out of the money. And so as things are like stable or moving higher, those profits just look more encouraging. And the time on those, a lot of those trades, Nick, are like November expirations, December expirations. So I could get out of some of those trades way early. Now, I say all that, I still have volatility risk. The markets may not. I mean, that shrug off that you talked about, dude, what if we see, let's say the 10-year. Okay. What if we see the 10-year crack 4.75? What if let's fast forward a week. Like let's go out through the end of August, and we have another poke at these all-time highs at 4.75, 4.8. I mean, are we going to see like Bessent step right back in and be like, look, we told you we're serious, and try to somehow curve this? Or is the yield market like, we're not going to listen, dude. We don't care. We want the risk. You want to entice us to be in the bottom market? Give us 6% yields. Give us 7% yields. Like, that will drag people off of equities. I promise you, that will drag people off of equities. If you make a T-bill and chill at 6 or 7%, with inflation at 3-ish, it's like you've got some fixed income folks that are going to be salivating at like a 6 or 7% yield with no risk. No risk.
And I think, I feel like the reaction from the Treasury to make this move is just that. It is a reaction to an existing trend and issue that's going on in the bond market. Like, they don't like that the 30-year is at the highest point.
Yep.
So this, hey, we're going to support the bond market. We're going to buy our own bonds, so yields should fall. Well, that is sort of like you're trying to like pinpoint exactly where it's going to reverse. You think it's going no higher. I think that was very specifically timed. I think that Scott Bessent saw everyone's headlines that we talked about the other day saying, hey, highest levels in the 30-year since 2007.
Right.
And I think that was very deliberately timed and then he said yesterday, I was listening to him saying basically that we are trying to send a signal to the bond market. And what that tells me is like, it's less about the actual, throwing cash at this thing and more so about, we're going to jawbone like the Fed might do with rates. We're going to do it same thing with the Treasury world. So I think more likely than not, it could continue to find a way to creep higher. And maybe the most alarming aspect of that is that I would not be surprised if yields continue to climb while the dollar itself continues to show some weakness. I have a little bit of a fun chart here we added to this to our main scorecard here on Edgefinder. This is economic surprise index figures, which I'm sure you're familiar with, like cities, for example. We've built our own. It's like just all of the Edgefinder's economic data and whether it's been beating or missing. And so what we can see here is this is your US, Europe, and Japan. All of them have been trending lower here. And so despite that, you would think, well, maybe people would rush to the safe haven of bonds. That's kind of what our system is generally signaling for US Treasuries. Slower economic growth, cooling inflation, jobs market cooling. And yet the bond market is like, nope, we're still selling bonds. And I think it's also, interesting that you have bonds getting sold alongside the currency, the dollar. So just an interesting dynamic. And I think that unique concoction, that combination is just ultra bullish gold.
To a point, because the scary thing is when that correlation is 1. If you have bonds being sold, dollar being down, gold is down, equities down, then it feels like, oh crap, there's nowhere to hide. Yeah. And that does happen. So right now, we're not in that environment. Equities are still like on the recovery phase. Again, I think the yield story it clearly has the Treasury's attention. I think it has the world's attention. This is where, the bears sound very smart, rational about how this is the end of times and get ready for that bear market. I honestly think that, look, I don't know if I said this on the show this week, but I am prepared and maybe over prepared. But like a 1998 style crash, which was not the top, by the way. The market crashed 20% in 1998, took away all the gains for the first half of the year, only to V-bottom and rip to a plus 20+% end of year. Yeah. All that happened in like a 3-month window, like from July into December, we had a 20+% pullback and a 30+% rally into the end of the year. Like, I'm prepared for something wild and crazy like that. I'm also prepared for a 2024 summer crash, which was the Nikkei was down 25%, 20%. The S&P was down 8 to 10%, and the same thing happened. We V-bottomed, and that still, like the Japanese yen ripped for 4,000 pips, but it didn't permanently damage the equity market. It was just it was a viable dip. It's hard for me to think that this administration and this Treasury and this Fed are going to somehow let this market fail. And if it does fail, then their backstops clearly aren't working. And that's a bigger problem. But I would not. It's the same thing. Like everyone thought oil is going to $200. Why is it not going to $200? Because they forgot how powerful strategic petroleum reserves are. And when the world released them, it suppressed oil prices, and we did not go back up to $115, $120. We didn't go any higher than that either. So, I just think there's levers in the system to play, and the market's experiencing that. And so it's digested, right? It's potentially noisy, choppy. But like you said, this is, if anything, I think the dollar is ultimately the weakest culprit here of or I should say the weakest beneficiary of like whatever this Operation Twist is. And what's funny is Besant was on public record for just ripping into Janet Yellen, and we're doing the exact same thing a decade later. So, it's interesting when you get to that position, when you're Secretary of Treasury and you're doing something that's exactly the same that you were criticizing a decade ago. I feel like it's the same as Kevin Warsh being a critic of the Fed, and now he's Fed chair. It's like, oh, it's a little bit harder.
They all do it.
Sidelines,
from the sidelines, it's kind of easier to criticize it than it is to do the dang thing. So, I think what's interesting too about oil is that you have this situation where the last few days, the administration has kind of been like, we're going to release economic warfare on what's going on Iran. And the way of also saying that, the other kind of mantra of that is, we're not going to do military action from here. At least that's what I kind of hear out of that. And what's interesting about that is that, oil is moving higher, but the lack of like military stuff, I think, is intentionally to keep, a strong face for the U.S. without getting oil to do this, right? So that's kind of an interesting dynamic, because economic stranglehold on Iran is a much less oil blowout approach than, boots on the ground and locations getting destroyed and all that sort of stuff. So that's kind of an interesting story too. That being said, oil is still kind of grinding higher here. You've been stuck in this range for a little bit of time. I wouldn't say it's impossible that you get some kind of, escalation. And I would be more like, so in terms of like the physical interventions, the physical conflict escalations, it seems like that would be more in favor for Iran to do in terms of getting oil price to purposefully rise to put pressure on the U.S. That seems to be clearly rising yields is like the most painful thing right now to the administration ahead of going into midterm elections. Like there's a play there that I think Iran continues to try and to go at. So it's a Game of Thrones currently, but right now I just feel like gold is still the winner on all that stuff. So, but I'm personally, terms of trade setups, I'm waiting for pullbacks. If I don't get them, then I will continue to say that on every stream and video until I finally get it. But
trade your plan, dude.
Yeah,
trade your plan. Yeah, I think you hit it perfect. It was, look, if we have oil pressure to the upside and we have yields to the upside, that is probably the biggest pain point right now for the U.S. markets to be on edge. So as I saw Alan posted earlier, we've said it. It's like a lot of roads point to gold going higher. And I'm going to say I feel very lucky that our plan of accumulating a 7 to 8 month drawdown in gold is starting to show fruits for the first time in a while. And so the patience was there. We weren't chasing the mania in January. We let the thing top out. We let it flush down a dollar cost average in. And I traded a ton of options. And so now I'm starting to, see some benefits from that, which is obviously a good thing. And I'm hoping that continues. And I am also looking at ways to, add to my longs. It's just, I'm not in a hurry. It's like, I wasn't in a hurry for the last 7-8 months. Even right now, I mean, it'd be a pleasant surprise, Nick, if we go back up to test, 5,500 or 6,000. It'd be amazing. Right. But do I think that's where we're going right away? Probably not. I mean, we'll probably come up here into open space. If we pull back, there's going to be a fib number. There's going to be some structure here. There's going to be a way to, you will probably get the entry that you're looking for. I hope, just for the sake that it's a good trade, and, nobody wants to see green, because then what do you do? After it's run this far, it's like, now what do you do? What do you do when it's up here at these highs
being
again?
Stuck. Yeah.
Yes. It's like, well, how do I chase? I mean, I don't want to chase that high. If I missed an entry like this, I wouldn't want to chase that high either. So, options.
Well, we saw what exactly happened when you do chase that high. You can see the left side of your chart. Yeah, exactly. It's like
you chase the high, and all of a sudden your granny calls and says, "You want to buy gold?" And it's like, that's the top.
And that's the thing is, I feel that you kind of said it there. The way to maybe actually play gold, and probably just markets in general, everyone wants to play it fast. Play it slow. Play the patient game. Take your time.
play the weight game. It's so hard to do in the moment. You know, you and I, Chris, when this was going on, we both were like, dang, it's like if my whole portfolio was gold, you know, you play around in your head, you're like, oh, this would have been nice. You know, I'd be sitting on, but you can always do that. Instead, you know, I've watched, you know, everyone on this stream, actually, almost everyone that I can think of that comes on here, everyone's been playing gold really well here recently, to not necessarily perfectly. Like I've been missing some of this recent rally, but I bought some longer term gold positions. Like I'm sitting in some gains there. You're sitting in some dollar cost averaging. James Lane comes on the show. He's been dollar cost averaging on gold. We also had Alan, who has been, you know, momentum trading it a little bit here to the upside. So, you know, it's like, it's kind of interesting. Everyone kind of sees the gold potential, and it's really hard to play it perfectly. But being patient generally is the strategy, right? If you were impatient on the short side and sold the lows, or, you know, you start chasing here because you're like, it just goes up every day and I'm sick and tired of being on the sidelines. Just take it from the experience that Chris and I have been doing this for a long time. It is so rare that markets don't give you any sort of pullback. And you will have moments where you miss an entire move. Like it's just going to happen. But most of the time, markets are going to do this. They're going to give you chances.
Yeah. And I mean, if you don't believe that, look at every semiconductor, look at the whole AI play for what got us the big burst in April, May to those all-time highs and those June all-time highs. I mean, what I'm checking right now this morning is, okay, we have SMH up $7. We have MAGs also up like 30, 40 cents. And that's not like, oh my gosh, it's a huge move. It's just the fact that they're both positive. We're recovering off yesterday's lows. Today's a major OPEX. We come into NVIDIA earnings, which by the way, has been performing better. It's really interesting. Like NVIDIA right here, watch that low, watch that high. It is perfectly positioned for an earnings play next week. And, you know, one thing that we have been seeing, I wish I could find the chart on this, but for the last 2 quarters, most of your big earnings reactions have been outsized moves. And that to me is somebody that trades everything, but trades earnings in addition to all this other stuff. Outsized moves are rarely the norm when it comes to earnings trades. In fact, most of what I do is I do calendar spreads, which is a fancy way of basically trading a very inexpensive expected move. Right. And I'm basically like, I think I'm like 50-50. I've had some winners, had some losers, and every loser was like, son of a gun, it moved just out, it like moved outside the expected move. And some of them, like Microsoft, dude, way outside the expected move.
Oh yeah.
So I mean, I hedged, just like I had the calendar spread, and then I just bought a debit spread, and that one, and like Amazon was a good one. Apple was a two-way trade. So there's been some winners and losers, but the point is, rarely do we see, like Mag 7, especially NVIDIA is usually notorious for going nowhere during earnings. But because it's August, it's lower volume, it's right in the heat of PCE and Jackson Hole, I just think next week is going to give us like a ridiculous amount of volatility, and it's whipsaw. Like I don't think we have much direction, but we're going to have like, wow, it's down X amount or it's up X amount, but it's going to go right back where it started. So just be ready for some head fakes and whipsaws. And that's not a bad thing. Like churning right now is good for time premium, honestly. And like you said, you know, making money slowly in 2026. It's funny how like it might actually creep up and be a good strategy. Like it felt like 2026 was the year to make money fast, because it's like, just buy everything AI. But I don't know if the AI trade is going to look fantastic. Any thoughts real quick on like all this additional circular financing? Because it just keeps coming in super hot, man. Like everyone is, you know, borrowing from Peter to pay Paul, and it all like centers around NVIDIA. And I know it's a narrative that probably needs to stay in check, but it's like, are we concerned that like this is crowding out like liquidity for other stuff that is just like all focused on this like AI circular trade?
Yeah, I think it can go on clearly. Like the U.S. national debt situation is like the ultimate example of circular financing, self paying yourself, and you know, renting out your own stuff to yourself. Like it is sustainable to an extent, as long as the underlying story. Like I would actually say that the internal financing that going on within the AI trade is not necessarily alarming until the actual AI trade itself gets called into question. Like if there's something where CapEx spending gets cut from the Mag 7, if they pull back on that, if there is some overarching, stronger federal mandate against data center buildouts that seriously impacts that. I don't know what it would be if maybe there was some breakthrough on semiconductor efficiency, memory efficiency that reduced the need for so much construction of that. Those sorts of things, I think, would then be the thing that lift up the rock and expose the circular financing, because everyone knows about it, and it's not enough to get the market to sell off on that alone. I think that in combination with some more disastrous, concerning story within the AI world would be the thing to get it to go lower. So to me, it's like, I generally think that it can continue to move higher until some narrative really breaks that story more decisively. I think trend following these things is the way to go for me personally. I don't necessarily love the trend in semis though. Like, I think you've kind of, like, it's not been as attractive as other places. And to your point, you've been playing things like VT. Like, this has been a nice diversified, kind of approach. RSP, like, you're finally getting dividend stocks, SGHD. You have all these other areas doing great. And I think that we come into this market this year thinking AI or nothing. And in reality, there's been a lot of stuff that has been participating, that has been doing really well. So personally, I think that those other trends still look attractive, and I do like the idea of maybe buying some semiconductors or software stocks if you get some sort of market turn down. But I have more interest in other areas right now. Trend following, the other stuff that's working well, gold, yeah. So like, and even international stocks, I think that the dollar's looking weak to me. I think that other areas could look attractive, other foreign stock markets. So I just think there's a lot of stuff right now to be playing. And I don't necessarily, I think that it's a bit of a chase fest right now. And so the thing that I don't really want to be chasing is the highest risk stuff, the semiconductors.
Agree. I agree. And, I think that there might be some ventilation still coming to the indexes before this is all said and done. I mean, this little give back on the SPY. I mean, I think we can come back and retest the 50-day moving average minimal. So does it happen all in one day? I mean, we're up, over almost $4 today. So the SPY is recovering, which is fine. Is it able to, get all the way back up to all-time highs again? I just caught a segment yesterday with Fundstrat, and this was Mark Newton, who's Tom Lee's right-hand man. He's the CMT guy. I mean, he's like, yeah, we could see this thing like pushing to highs. They're still forecasting a pretty ugly, chop fest whipsaw correction going into the midterms. Even Jem Carzana and Tasty Trade, who's been on a lot, he's talking about like right after this OPEC, so after today, that there's most likely this midterm dip that's going to be historically around like 10%. I'm like, well, I'm gonna prepare for that. It may not happen. We might, I think I talked about this week, we may have perfected, and this is like famous last words, but we may have perfected like volatility suppression. And it's like, and it looks great until it doesn't. And it's like, I don't think that you can forever contain volatility. At some point, it's gonna just keep poking the box, and it's gonna break out, and it's gonna be like unstoppable. But it's like, I mean, Nick, do we have enough? It's like, what baffles me is like, how could this happen? How do we take out March lows and then still V bottom to all-time highs? It's like the only reason that trade stays alive with a V bottom is because every portfolio manager, every hedge fund that did not chase AI this year, that is underperforming the broader markets, they are going to buy a relentless dip to push this thing back up into like either the dead cat bounce or pump this thing to fresh all-time highs, and they're going to bail so fast on profit, it's not even funny. But it's going to be like, yeah, I suppose that can happen. But for an index, it just seems like I don't know why that would happen in 2026 when we have zero DTE stability. Like, I watch this stuff every single day, and watching a market like yesterday, here's a good example. Okay, yesterday's market, we came down overnight. Like, we had a very like almost collaborative sell-off at 7 a.m. Eastern time on futures. We came right back up to kiss 7,000 perfectly, and that was past support becoming resistance, and we leaked lower all day long down to about 40. Now look where we are overnight. All we are looking at today is a zero DT bet that is like, hey, look, market had a bad day, buy the next day. Like that is that you said mantra. Like that's the mantra. Buy the dip. How do you buy the dip? Let the market be down almost 1% a day and buy that dip. And all you have to do is take a calculated 0 DT bet. And this is the crap that happens.
Yeah.
A 0 DT bet is paying you today. I just closed out a winner for 40%. I got filled literally at the close right here. And I closed out this morning on global hours for a 40% winner. Like, that happens. And it's like, and if I'm wrong, dude, it's a defined risk trade. So like 0 DT flows are really, really powerful in providing a ton of, like, you know, from one day to the next, a lot of stability and efficiency in the market.
You asked a question, Chris, that I want to give you an answer to, just for fun. That concept of what gets you the kind of sell off there. I mapped it out as like a 20% correction if you were to see a pullback from current levels down to, I think those were like March and April lows.
Yes.
Okay, so I just wanted to throw this out to listeners. You get into these market environments. This is 2018. We have used this as an example many times. I just think it's an interesting one because you had a situation in 2018 where you had a vol spike in the early parts of the year. Markets sold off. This is S&P 500. The white line is the VIX during that time. On the left-hand side, given its own price scale so that we can see what the VIX was at during that time. So markets bottomed out in early 2018. I can't remember the exact, I think it was interest rate stuff going on. Rate hikes. Well,
2017 was the year that the market was never down. It was like the vol suppression. The entire year, 12 months in a row was up on the S&P. So vol just had to explode at some point.
Yeah. So here's 2018, come into January and boom, massive VIX spike up to the, high 30s, low 40s, maybe. I'm not sure exactly, but
is that a 10 to 36 VIX or 10 to 40 VIX?
Yes.
Oh my gosh.
Yes. So you had this
ridiculous.
ginormous spike up in the VIX. Stock market craters lower. Let's just see what percentage that was. It's a 12% move, but it happened really quick.
Yeah.
And then, VIX pretty much died for the rest of the year in 2018. We were back to that 2017 environment where VIX was super low. You're talking about a VIX hovering around 12, let's call it 12 to 13. And then the markets chatter higher all year long. And then we had a round two that blew out volatility again.
Oh.
And this one was nasty. This was right all at the same time. This is a window of about 3 months where the volatility dramatically rose up into the 36 level.
Yeah.
And so it is a good reminder that you can go from an environment like this where you're like, gosh, is this market ever going to see volatility again?
Exactly.
To 3 months later, markets much lower, volatility is much higher. And I think it's just a good reminder to scroll back in your charts periodically for the listeners and understand that, like, never say never. People start to think, gold is never going to pull back again. Or people say semiconductors are, they're indestructible. They go up every day. Just acknowledge in markets, it's better to never say never. Like it can turn around very quickly. Things can change overnight.
That will be look, a VIX spike from 15 to 35 or a 15 to 40 will get everyone's attention. And
that blows up a lot of people.
Absolutely. I mean, what does it do? It cleanses all the leverage. It cleanses up all the future span margin. It cleans up all the stupid shit that people are doing. And it has no mercy. So, I mean, to me, it's like, I am cautious enough that it's like, well, I'm kind of prepared for something like that to happen to try to trade it with some dry powder, as opposed to, oh no, what do I do? Now, I realize that a move like that is going to also give some red in my portfolio, give me some volatility risk, but hedging has been quite cheap. I have hedges that are costing me like maybe $300 to $500 that could pay me 10 to 20x if we get a spike like that. That's like, in a 2 to 3 day window, we go from a 15 VIX to a 35 VIX. My futures hedges might be amazing. Maybe. And if they're not, okay, fine. But again, I hate to say like I'm prepared for something like that, but this environment with what just happened in the Treasury as well, it's like, it just seems like, how are we not primed for some type of silly little move that we're going to be talking about? And this is what happens is when something crazy happens, we keep talking about it. We learn from it. Right. But I'm going into this where it almost seems like it's too telegraphed. Like,
Sure.
why am I talking? Why have I been talking about like this big, like 10% correction, 20% correction? Why is Tom Lee talking about a 10 to 20% correction? It's going to feel like a bear market. How are you talking about this openly on like every financial outlet? If the world is prepared for it,
it's no
like,
longer a black swan. Yeah.
Right. It doesn't happen. And so it's the irrational grind that is like, ugh, the market doesn't want to go down. And then when it's euphoria to the upside, it's like, that's when you're probably the most vulnerable. So anyway, it just, as always, like, you're never super comfortable. Proceed with caution and just be ready to take good opportunities. And honestly, right now, like the next 60 days, probably the most important time to just manage risk. By far, manage risk and control your trades.
Agree. Manage risk and keep an open mind. That's a couple things to stay at the ready with. Chris, we're out of time. Thanks as always for another great session, and I hope you have a great weekend, man.
Same. You too. Thanks.
Okay, guys, up next, we've got Alan Perez coming back onto the show. Last thing while we transition here, if you guys want to try out Edge Finder, our tool here that helps scan macroeconomic data, we added some cool things. This new economic surprise index is now available on the bottom left during or on the screen here. This gives you a nice view. I thought this was kind of interesting. Notice how the dollar has been getting a more bearish reading as the surprise index has been falling, and then also simultaneously as the economic surprise index, which we have US dollar, euro, and Japan or Japanese yen, you can see all of them trending lower. Sure enough, look at that divergence from gold score. Gold score moving higher. That's exactly what Edge Finder is intended to do. It's to monitor this stuff, to keep a pulse check on the economic data and score accordingly. So just thought that was a cool addition, and I love seeing it there. So hopefully you guys who are Edge Finder users do as well. If you don't have Edge Finder, try it. Link is in the chat right now as we speak. Grab it there. Up next, Alan Perez is back. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning. Oops, did not share my screen. My apologies. Doing that right now. There you go. Good morning, everybody. Back at it for round two. Hope you guys are doing fantastic. I'm going to piggyback off of what Nick said there. This right here is a pretty neat tool. So I'm going to say if there's anyone new in the room, and you guys are curious what we're using, there is a free trial right now for the Edge Finder. I definitely recommend that you go ahead and take advantage of that. But this right here is going to give you all of the technicals, the institutional activity, economic growth, inflation, jobs market, everything that portfolio managers at hedge funds, at institutions look at, right? It automatically gathers all of that and it compiles it in an algorithm and it gives you a score, very bullish or bearish, right? So with this one, Edge Finder is actually notoriously scary good at getting gold right. It's not a signal service by any means. So just because you see a bullish reading doesn't mean you blindly buy it. You use this along with your trading strategy that you have already proven. But with gold, right, it pointed out gold being bullish, and since then it has just continued to rip higher. So definitely go ahead and get yourself a copy just to try it out at least, and then maybe you can buy it later whenever it's a better time for you. So this is the Edge Finder. Again, I love it. It's paid for itself many times over. It's really good, and it tracks a lot of different asset classes, not just gold. It tracks currency pairs, the majors and the minors. It tracks indices. It tracks lots of things, the metals, of course. So definitely go ahead and get yourself a copy if you can. Hey, Kier, or hey, Alan, had a question earlier. If you check on the Eco Strength Index, New Zealand is bearish and pound is neutral. If you check currency index, NZD is doing better. And if you look at the chart, pound is pushing lower. My question is, do the divergence stays only for short term or for continuous? So when it comes to the Eco Surprise Index, this is like relatively short term in nature. So this one here is going to be short term, and then the Eco Strength Index is going to be more long term. So that's what I'll start off with. Now, looking at New Zealand, it's at 50%, and then the UK is at 40%. So let's go to the actual chart here. So you're looking at pound Kiwi. We'll pull a pound Kiwi. Pound is lower here, lower than the Kiwi, which seems to be making sense because Kiwi is a little bit stronger there. Let's go to top setups page, and top setups page is going to give you kind of like the more holistic view, I would say. It's getting a bullish reading right now of 5. So you have like two contradicting type of things. Here's what I will say. Pound versus Kiwi. These guys are both these central banks for these two are both hawkish right now. And so you're having two strong ones. So I really wouldn't be surprised if you see range bound motions. We all know what happens when you have two strong or two weak currencies trading against each other is that you get a whole lot of nothing going on. So with this one here, I actually would expect probably some range bound motion. Now, that's not financial advice. I'm not saying to buy right here, have a stop below structure, and then take profit, be the 200 or even above. I'm not saying that, but I wouldn't be surprised if that's the case. Alan, look at crypto. I guess I was right calling for AI rotation to crypto. Dude, crypto, Max, it's going crazy. I was listening to Chris and Nick's segment here. I really wouldn't be surprised, and I'll be looking for this too to happen. You have a very solid kind of opportunity for this to be turning into one big range trade, right? So that's what I'm looking for crypto here for Bitcoin specifically. You guys know that I wanted to short here at the 280 moving average, but if I can see price hold off right here and take it to the downside, then that just means my risk reward improved, right? Because originally I was going to take a short attempt right here, stop above the 200-day, and then target 60 or 50K. Well, now I could possibly get at an even better price, put my stop above structure, and still target the 200 or 50K. And that just increased my risk to reward potential. So I'm going to be watching that for sure. One thing that I'm looking at is like, okay, so Bitcoin really liked the bond market story, right? It reacted almost immediately to that. So as soon as we got the announcement, yields went lower, Bitcoin started to rally off of that. But it's still rallying today. But then you have the bond market, which is recouping all of its losses. I mean, the 10-year has completely recouped all of its losses, and the 30 is on track for that. So I'm like, okay, if the structural kind of driver for this to the upside is fading off, I would imagine that there is some sort of fade environment here for crypto. Now, I'm sure there's also some other drivers like Marco mentioned, the halving cycle. And when you go to Bitcoin and you like do this right here, I found this out yesterday because I was having to do research for the markup that I did yesterday, which, by the way, totally join the Telegram channel, completely free, free markup every single day. But when it comes to the crypto crowd, guys, they throw a lot of reasons why crypto's up. Like, it seems like they just try to find anything that they can. It's just crazy. Institutional demand, lots of lawmaking stuff too that they claim is propping it up. Just so many things. I think that there's a reason why as soon as the yield started coming lower, that Bitcoin started to rise, right? So I'm going to attach that for the reason that Bitcoin's up today and yesterday and the day before. Okay. So what I'm saying here is you had yields lower, Bitcoin skyrocket higher, but now you're seeing yields recoup all of that, but Bitcoin's still higher. I may look to fade that. So for me, I'm really interested at 80,000, 82 area for a potential short opportunity on Bitcoin. But that's just me though. Yeah, Max, that too, right? So they were saying that the lots of ETF inflows, they were throwing everything that they could. And you know what? The crypto bros out there have been in a really harsh winter, so I'm sure there's some excitement there. But I'm just seeing how much steam is left in that excitement. I think personally that you have an environment where, especially if yields just continue to stay sticky, and risk is not really in play, that you see Bitcoin do this for a long time, for a little bit. So I'm looking forward to that. If it does come, I'll take it. Let's see. You guys said something here. Maybe we get a correction until 75K on Bitcoin. Who knows? But I'm targeting, if I were to short here at 80K, I'm targeting 60K or 50K. That's what I'm looking for. I definitely think it's possible. What is Edgefinder saying for Bitcoin too? I'm just curious. Bitcoin. Where are you? Let's see. Neutral. Cool. It's not bullish. I like to see that. As long as it's not bullish. Con, hope you didn't short Bitcoin at the 200-day. I did not, man. Thank goodness I did not. That would have been a very quick stop loss. Very, very quick stop loss. But my hesitation was I saw how quickly we got here. I saw the reason behind it. And I was like, I'm going to let this thing really react to it. And it just blew past the zone, man. It just did not let off the gas. So, and it's still doing that too. So I'm waiting to see this thing to let off the gas. So similar approach, right? Like I'm saying right now that I want to short Bitcoin at 80 or 82, but I'm not just going to blindly short it if this thing is continuing to just move higher and higher and higher. If I see that the gas is letting off a little bit, then maybe I look to short it. But if this thing just keeps blowing past through, I'm not just going to try to, stand in front of a train. Can you look at NZD CAD? Yeah, sure. I can look at NZD CAD. What's going on with NZD CAD? Let's see. NZD CAD. Guys, if you guys have noticed this, I'm not showing much love to the miners. Okay. But I'll look at it with you guys. Let's see. NZD CAD. Very bearish. -7. Okay. Canada's. Here's the thing with this too. Like, a lot of people are in the same spot. Like, Canada's macro is improving, so is Kiwi in a way. And so, like, this chart to me is like not enough. Like, it just doesn't interest me. You know what I mean? But it's getting a bearish reading on the edge finder. So maybe you short, somewhere within this top end of the range. You could target the 200-day moving average for some kind of a mean reversion and then have a stop loss above at like 0.884. But again, not financial advice. I'm just not too interested. To be honest, I'm just not too interested. I like if I'm trading currencies, I want to trade the majors. First of all, I want to trade euro dollar because I want to trade the most I can to DXY. So euro dollar makes up the majority of the DXY basket. So that's like the best way to trade actual DXY, unless you're trading like ETFs or whatever. You can do like UUP or whatever. But for me, I'm like, I want to trade the dollar. I don't want to trade, macro for New Zealand. I don't want to trade macro for Canada. What's hot right now is US macro. And so I want to trade that. And so the best way I would do that is euro dollar. Dollar Swiss is another one that I like to trade as well in this environment. So that's kind of what I'm looking for. And with dollar Swiss here, it seems like we are getting pretty close or closer to the pullback opportunity that I'm looking for. So with this one here, just put a fib from the high to low. I'm looking for 38.2 or the 50% retracement level to go ahead and short still use DCHF and take the next leg lower if it decides to do so. Tom says A1 to the moon, man. Thank you so much, guys. I hope you guys did like the live stream like I asked you guys earlier. I hope you guys follow through with that. And that's that one guy that was driving. I can accept that. If you have to short euro right now, what would be the best pair to use? That's a great question. Euro Swiss. Swiss franc has been pretty strong recently. I would take Euro Swiss for sure. And look at this. Let's go fib here. It's at the 50 right now. Could get to the 61 or the 50, but I would take Euro Swiss, honestly. Let's see if that's somewhat correct here on Edge Finder. It's neutral. I say Euro Swiss. I would also say Euro yen, maybe. That's tricky though, because that's contingent on Japanese yen continuing to rise. Yeah, probably would not the best. I would say Euro Swiss, honestly. Oh yeah, Euro CAD. Euro CAD could be a good one too. Because Canada has been doing quite well recently. In fact, you do have potential to break this structure right here. You're below the 200-day moving average. If you break it and you see like a break and retest, maybe 1.158. But again, I'm just not too excited with the miners. There's just better things out there, you know. I really, really like, which I'm sure a lot of you guys agree with me here. You guys really like gold. I like gold as well. I'm just waiting for a pullback that I hope happens. And like Nick and Chris said too, right? When you have volatility quiet, right? It seems like you may have sort of a grind higher, a grind higher with no pullback opportunities that allows you to justify getting in. But what happens is usually when you have this going on, you just have more leverage getting thrown in. You have more crowded positioning. The more and more you defer it, and then when the VIX spikes or when there's some kind of a volatility event, you get the pullback super, super quickly, right? So it's like worth the wait. You don't know when it's going to happen, but you just have to wait and see. So yeah. What software or platform are you using to check the values of the pairs? So Poppy FX, I use this right here, man. This is the Edge Finder. So it doesn't do just Forex either. It does everything. So it tracks, GBP, JPY, which is very popular in the Forex community. It tracks gold. It tracks silver. It tracks the Nasdaq. It tracks the S&P 500. It tracks oil, natural gas. It tracks Bitcoin too. All of these pairs right here, you can see that it tracks it all. This is called the Edge Finder. So just go a1trading.com/Edge Finder. A1trading.com/Edge Finder. Go ahead and find that right there. There's also a free trial going on as well in the chat. So I don't know where that link is at, but there's a free trial going on. So if you want to just give it a shot and try it out, definitely be my guest. My favorite thing to look at this with is currencies, major currencies, and like gold, for example. So this is really, really helpful. But it basically, some people trade with only technical analysis. This one basically gathers the technicals, the sentiments, and the fundamental analysis, and it does it for you. And it just gives you a score, bullish or bearish, right? So it kind of does all that heavy lifting homework for you. And it just, you can get back to trading, right? So for me, like it's doing the heavy lifting for me. I know gold is bullish, right? So now it's just a matter of me waiting for a pullback, and that's it, right? And just follow the move until it no longer has that momentum, right? Also, too, anything dollar related. If you go to, let me show you this. If you go to category and you go to majors only, right, you can see that you have pound dollar bullish, euro dollar bullish, Aussie dollar bullish, Kiwi dollar bullish, right? So I just go to those charts and I wait for a pullback, right? I wait for a pullback. Aussie dollar, super strong right now. It's bullish, right? It's been bullish for a long time. Euro dollar too. It's been bullish for a very, very long time. I actually took a profit on this trade. Pound dollar, same situation. Kiwi dollar, same situation. Then you go to the other side of the spectrum, USD CHF, USD CAD, bearish, right? Look at USD CHF, bearish. USD CAD, bearish, right? So what I'm doing here with USD CHF specifically is I'm waiting for that pullback in USD CHF. And when I get it, if I get it, and if the score is still bearish, I take it and continue riding the wave. So it just makes the macro side of things a lot easier. The way I say it is, it makes macro just as easy as technicals, because we all know technicals is super simple. Like you can learn technical analysis in one day, honestly. Like just horizontal levels, basic trend lines, stuff like that you can learn in one single day. So it just makes the macro just as easy. FLO and EU have good setups. What's flow, guys? Help me out here. FLO, am I missing something? And EU have good setups. I like EU to the upside, man. That's like my favorite one. And it seems like we may have a pullback on the horizon here. So we're seeing some wicks here on euro dollar. Hopefully we do get it. And then I'll take this back to the long side. I have my buy limit order right here at the 200-day moving average. Where should you learn technical analysis from? Ooh, that's a great question. I would say, like, with technical analysis, you don't have to get too complicated. So here's the thing, like when you do start learning technical analysis, let's say you're brand new and you just start like looking up online technical analysis, what you're most likely going to find is a lot of technical analysis based strategies, right? Like that are super heavy on the technicals, and they like, I'm not saying it's wrong, but it's very overcomplicated in my personal view of technicals, where to me personally, I just think with technical analysis, you just got to keep it simple, man. Like don't overthink it, make it super simple. I look at the higher time frames and I literally just draw horizontal levels, right? So like I see this right here. This to me is a horizontal level where price has reacted previously. That's resistance, right? If the level was above price, it's resistance. If it's below price, it's support, right? So super simple, right here too. That's kind of what I do, man. It's really not complicated. I think when you get super granular and go like to the 1 hour time frame, then you look for an entry, and then you go down to the 15-minute time frame, and then you look for like a gap or something. That's like doing too much. You don't gotta do too much, man. Just basic horizontal levels, a trend line if you want, maybe a 200-day moving average or whatever. That's all you need. It's really all you need. Oh, and like Derek said, Fibonacci retracement levels, super easy to learn. You just pick a low or high. So for example, you look for a leg higher, right? So this was one leg higher, pause, second leg higher. So if you want to get into this leg here on the pullback, all you do is find the low and high, which the absolute low of this leg is here, and the high is right here, right? So we determine that. You just put a Fibonacci from the low to the high, and then you have your key fib levels. And so pullbacks are just a matter of finding it to the 30.2, the 50, or the 61.8. If price reaches any of these levels and it continues to rebound higher, then the trend is still intact. You are still in an upward trend. If price reaches the 61.8, right, you can think of the 61.8 as the last line of defense in the trend. If it breaks it, then likely the trend is over. All right, and that's it. Super simple. Walker, you said it for me, man. I'm going to applaud you on this one. You said it for me. Lower time frames will drain your account. I didn't want to say it, but you said it for me. So shout out to you, Walker. The lower time frames will drain your account. Okay, if you're like trying to find stuff on a 5-minute or 1 minute chart, I'm just gonna pray for you, my friend. I'm gonna pray for you, and I'm gonna hope that it sucks because like you're gonna have to find out the hard way anyway. One opportunity says, Sauce, I would advise not to touch the lower time frames until you can profitably trade on the higher time frames. Seems like you guys are doing the work for me. I appreciate you guys. Yeah, the higher time frames, it's just easier, it's cleaner, and if you're trying to remove a lot of the noise, just zoom out. A daily time frame, a weekly time frame is fantastic. If you want to get even lower, 4 hour. 4 hours is the max I would go, right? But like anything like 1 hour and below, I think is just doing too much. But what you can see on the 1 hour here, like for example, this is a chart on here. Let me make it cleaner here. I'm gonna go to Euro USD on this one right here. So this is the 1 hour chart. You can see that I see this right here, potential level of support. You can see the exact same on a 4 hour, right? So no need to go super granular. See, and you can see like this is solid support. But if you go to like a 5-minute chart, now you're seeing all kinds of things, right? It makes it complicated for no reason. So yeah, that's just my take on that. Super simple. One thing I will say, kind of the best charts to learn technical analysis, like horizontal levels, stuff like that, would probably have to be on Forex. Forex responds really well to horizontal levels because they're mean reverting, right? Currencies tend to chop around a lot, so they tend to respect those levels. Do you use confirmation entry or you enter directly? I just enter directly, man. For example, use DCHF because I keep going back to this, but this is something that I'm literally going to be active in pretty soon, I would imagine, if I get the pullback, right? So with USDCHF, I'm going to clean up the chart here for you. I'm going to move these Fibonacci retracements a little bit just so you can see. So with USDCHF, right, I see this as previous support that could possibly turn into resistance, right? So for me, if I want to go short, I'm bearish on this market, I just want to short anywhere in this general area, whether it be the 38.2, the 50, or the 61.8. That's what I care about, right? So as long as I get filled in here somewhere and I have my stop above the 61.8, I'm happy with the trade. There's no need for me to scroll down to the 15-minute chart and try to like nitpick and like bottom tick or top tick a candle to get the most perfect entry. Because I'm a swing trader, I already have the expectation that my position is going to go into drawdown because I'm not going to tick the trade, right? It's very, very rare that I experience no drawdown. So that's just kind of what I do. Like, set that expectation. Your trade's going to go into drawdown first, right? It just is what it is. You got to let the trade breathe and do its thing. Kyle Martin, you're awesome, man. Alan, just the ooze the swag, man. Too cool for school. Am I still in the gold trade? I am not in the gold trade, but I am waiting for a pullback. All right, so similar. I'm just gonna be patient. The pullback level that I'm watching here personally is gonna be 4,400 now at this point. So right here, 4,440. That's kind of what I'm looking for. And again, when we get there, I'm not going to be too precise. I just want to be in this general area. I'm going to have a wide stop loss to let the trade do what it has to do, and I'm going to write it out, right? So, yeah. But that's it for my portion of the segment, guys. Thank you guys so much. I hope you guys have a fantastic and blessed and safe weekend. I look forward to trading with you guys next week as well. We have Jackson Hole, which could be some volatility, but again, we have lots of movements here. Things have really started to heat up here in the market. So very, very happy to be trading alongside you guys. Have a blessed rest of your day, and I'll pass the show off to Tiger. See ya.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Friday. Great day by default, as always. You guys would be super proud of me. I got 8 hours of sleep last night. It's the first time that's happened in a while, partially because I missed my alarm this morning. But hey, I tell you what, I'm ready to start turning some cartwheels for that and for the fact it's Friday. So anyway, hope you're all doing well out there. That's right, Alan, you are too cool for school. I agree with that. And I also agree with what he was talking about with analysis, technical analysis, guys. Sometimes we overcomplicate ourselves, especially those of us that have been here for a long time. I'm going on 12 and a half years on this, and I spent a decade just focused on every technical indicator, technical analysis piece that I could find. At the end of the day, after all of it, okay, after everything I've learned from that, though, I still go back to the basics, right? Just give me a naked chart. I used to have this thing so loaded down with indicators, especially at the bottom. In fact, I still today even think I have too many items. But at the end of the day, just give me structure. Am I in line with the higher time frame, the daily, the 4 hour? I agree with what Alan said. When you start getting down to the hourly chart and below, you're starting to run into noise. And it just kind of, it makes you see things that aren't there versus if you just scroll all the way out, zoom out, when in doubt, zoom out, and actually go find where the trend is and just latch on, right? So at the end of the day, give me my zones, my demand zones, my supply zones, the resistance becoming support, like a lot of the guys like to use on here. And that's it. So, yeah, we don't want to overcomplicate this, especially when you're newer. It's good to learn indicators and things like that, but, you know, don't be like we all used to probably be when we first started and have 14, 15 indicators on here, because it can definitely get confusing pretty quick. So, yeah, good stuff on that. Keep it simple, stupid, as they say. Guys, let me know what tickers you're looking at up here. You know, we'll take a look. I did get in that Aussie yen trade the other day. I think I told you guys that shortly after that bond announcement that we had, and it's looking pretty good. Okay, I got into that. Where was that? I think it was off of this zone of demand over here. We have successfully chewed through that overhead supply, and I think I have a take profit a little higher up. Yeah, basically at the top of that. So not too far away from the take profit. I'm just going to let it ride, and hopefully it just closes and gets me out of there for a profit fairly quick. If we get towards the end of the day, it's still up there, I'm just going to close it out. I'm not going to hold it over the weekend. Not with as quiet as it has been of late. You know, you could almost make the case that we've went through a little bit of quiet period for the Middle East relative to where we've come from. So, you know, President Trump is threatening economic D-Day to Iran. Iran is still saying they're not budging until their demands are met. So that just tells me that something big might be coming. I don't know what it is, and I don't think I want to stick around for the weekend to find out. So just going to take my gains on that Aussie yen trade and just get up out of there. That way I don't have to worry about it over the weekend. I've already moved the stop loss above break even as well, so I can't lose on the trade. What you guys got? CAD Swiss longs. There's Mr. Thato, bought on 4-hour 200 EMA CAD Swiss. Let's go look and see what you did, Mr. Thato. What did you do over here? You said H4 200. Okay, yeah, the 200 EMA bounce over here. Yeah, I use EMA just for context, guys. I like to use the exponential just so it can show a little favoritism towards the most recent candles. But yeah, good stuff on that. Good stuff. Yeah, I mean, you guys know me. I like to pair the 200 EMA with a zone. Let's see. And yeah, I don't really see it for my style, but yeah, hey, at the end of the day, here's again, just going back to simple technical analysis. The important thing is you stayed in line with the trend on your daily. You stayed in line with the similar trend on the 4-hour. You could make the case that all this back here was a little bit of former resistance turned support. You got wicks right here. You got wicks right here. You got these wicks in here. So that's just keeping it simple. Keeping it simple, stupid, right? Good stuff. Go get that money. Let's go look at our edge finder over here. Pound yen still at the top, silver gold up there, pound dollar. Pound dollar is not as strong as it was over the last couple of days, but it is still very bullish. You can see we had a couple points of a pullback on that over the last 24 hours. Big drop on pound Swiss, -4. Wow. Let's go look at some of these other items on here. Dollar CAD, dollar Swiss, still near the bottom over here. The dollar got a little less weak. How about that? Okay. Russell, UK, the Nikkei, got the DAX. You got some of these indices on the bearish list now. So anyway, yeah, that's kind of a look. Still basically the theme for me is selling the dollar. That's not changed. Going over here to the charts themselves, taking a look at these majors. Aussie dollar finally did get that real strong break. Since I was on yesterday, we broke through that overhead supply. So looking for a retracement. Just give me a nice retracement to a zone of demand. I still have this one down here, but now that we've kind of broken this structure to the upside, everything I was watching down here, I may consider just moving up to the next consolidation. Well, I can see right there, there's a little bit of a zone hiding out right here. Not the greatest volume on the way out, but it is a zone by definition. So going back to that technical analysis thought, we can just ignore everything and just at the end of the day, we can look at a naked chart on this stuff, right? And say, okay, that's a zone of demand. Look for a retracement to that. And again, this is where sometimes I will miss out on trades, being 100% transparent, because I do all the digging of going down and looking at the volume when that was created. See, I can shoot myself in the foot with this stuff because I do miss trades all the time because I'm looking for the strong volume, guys. You guys know that. I'm looking for the leg out to be nice and strong. I want to see that institutional activity really start to jump into the markets, because to me, that says that that's the smart money trying to create their zone. So they want to defend that on the retracement. So yeah, I'll still keep this in mind. So what I'll end up doing is just move my alert up here to this zone, call it good. Okay. And then this zone down here is still there if it drops. But at this point, I'm going to look at the zone a little higher because we broke structure, right? So give me a retracement of that, and we'll see if we can't pull out a trade from that, maybe going into next week at some point, if it does decide to turn around on us. Euro dollar did finally crack into that overhead resistance as well. Still looking, nothing's changed on this one. 116 area. It's basically where I'm looking at for this. Now this is getting in a little bit of noisier. Okay, this is that 1 hour time frame. But remember, this is that point where the bond headline came out where they were doubling their bond buyback the other day, which is really the case for about all these assets, guys. I'm still looking for retracements on some of these that haven't just moved away way too far yet to the to retrace that point in time right before the bond announcement came out, because this is clearly where all the liquidity stepped in the market. There's definitely going to be a lot of smart money probably wanting to defend that headline structure, that headline base based off of liquidity. Okay, that's them showing their hand right there. So that's euro dollar. Nothing's changed on it. Pound dollar, we're continuing to just hacksaw right through that overhead supply. We've already done that. Still looking for a potential retracement down to the same level, the same Wednesday morning level. Okay, the bond level. Kiwi dollar, same thing. It's down here a little deeper. We chewed through that overhead supply. And I would normally want to look at this area, but again, there's no volume through there. That was during the intraday switchover yesterday. It's not a whole lot of volume. Okay, the Asian market came in, started to push price up, but on very little liquidity. So I just don't see that as effort matching result to my liking. But if you're just looking at it based off structure, it looks pretty nice. Let's just call it what it is. So let's do this. Let's get this daily out of the way, since that's old news at this point. Clean things up a little bit, and voila, there we go. That's Kiwi dollar. Ultimately, this zone is probably getting too far away from at this point. This original one where we had the triple bottom just ahead of it. This is that structure I love to see, guys, when price was back in this area, right? But again, now we've shot way up here, and we got to reevaluate things, because it may not even get down here. So obviously this is a swing low down here. We do have another one a little higher right here. And just like what we looked at on one of the previous asset, on low volume, on low liquidity. Okay. So yes, this is a zone, but I don't think I'm really too interested in Kiwi dollar at the moment. I just think I like some of these other structures a little better. Dollar CAD, just sticking with the majors theme over here. Same thing. Still keeping an eye on that Wednesday level. Yeah, I'm a broken record at this point, guys. Waiting for those bond headline zones to get retraced. Dollar Swiss, same. We did bounce into the daily below. We did obviously get a spike from that, as you can see, and we broke all these structures over here. I don't see the supply that I like to see throughout this area. This is just a waterfall straight down. Again, unless you start pulling in some of the former supports to possibly become resistance, which I believe lines up with Alan's fib levels that he was talking about towards the end of his show. Okay. So anyway, that's dollar Swiss. I think dollar CAD probably going to be my favorite at the moment. And then still the other dollar pairs where the dollar is the quote currency. So currency wise, still looking at most of the majors. Bitcoin has obviously just been going to the moon at this point ever since that announcement came out the other day. And just kind of looking back at the major time frames again, all the way back to the monthly, just to remember where we're at. Okay, still in the monthly demand, still in the weekly demand, although we did peak through a little bit the last couple of weeks. It turned around and retraced. So monthly, weekly, the daily, which was the old one that we hit. Okay, same thing, just barely retraced. And that's where we got our bounce. Monthly, weekly, daily, demand zone confluence, pretty strong, guys. That's why we're having troubles from it if we're just looking at the technical side of things, with the other demand zone further down at the bottom of the monthly. Okay, so that's just kind of some longer term thoughts on this. When we look at this on a monthly, we did break structure to the downside, right? So this is our change of character after our series of higher highs and higher lows, and then a change of character. This is what they define as a change of character. I call it break of structure, but it's the same thing. Change of character just means if we're in an uptrend and we break that downward structure, that's a change of character. Vice versa, if we're in a downtrend. If we're breaking one of those upper or one of those lower highs, that's a change of character to the opposite side. So that's just the context I want to keep all this in mind with. Monthly demand, weekly demand, daily demand. Okay, weekly, yes, we are getting a series of lower lows and lower highs. The highs and lows are starting to get less deep each time. So this is something to consider, guys. You got a high point, you got a pretty deep lower high. You got a less deep lower high. And now with this last 3 days of price action, we have an even less deep lower high. So you see how it's trying to tell us, hey, we're trying to draw up a bowl or curve around to the upside very, very slow, very lazily, very gradually. Same thing with the lows. Pretty strong low here, less strong low, and then now we've almost got a double bottom. All that takes place within the monthly, weekly, daily demand zone. Okay, so I could definitely see this thing slowly starting to turn around. I'm sure the crypto crowd's interested in that, but I still think we need a structural break of this most recent weekly high point so that we can get our what? Our change of character. Get our change of character, and then look for the retracement wherever it may be at that point, right? This is more a longer term look at it, but that's where I want to start things. That's why I don't want to start on a 5-minute chart, kind of like what Alan was saying towards the end of the show there, right? Got to start with the higher time frames. And then, yeah, it's a very similar picture on the daily. Same thing. Just want to see a break structure, guys. Let's break 82,814 and touch 84,000 or somewhere in that area. And then I want to see a retracement for a possible, buy at that point. That's the technical way to look at it. But EdgeFinder right now is just not agreeing with it. In fact, we had the bearish ratings on it as recently as I think yesterday or the day before. And yeah, we're at -1 right now. So yeah, we don't even have that good of a setup. The data is not in its favor. The sentiment's not in its favor. The only reason Bitcoin's not as ugly as it was is because of the technicals, because of the moving average crossover that Nick uses in his algorithm has flipped bullish, clearly, because that's what 3 days of post bond buyback doubling will get you, apparently, for Bitcoin right now. So yeah, still got some work to do on it, but that pullback doesn't look so big when you scale it out on a daily time frame, does it? Right? Looks strong though if you're looking at it on a 15. Right? Yeah, this is a very strong uptrend, right? No, you gotta scale out. This is what the banks are looking at, guys. Remember this. Always remember this, especially when you're starting and you watch a trading strategy video on YouTube. It's a 5-minute time frame or a 15-minute time frame or whatever. Right? That's how they hook you. That's how they get you. It's action. It's like a slot machine, right? And just remember, we're not here for entertainment. We're here to make money, right? So what else you guys got? Throw out some charts for me. Aussie yen and Kiwi yen on the EdgeFinder. Yeah, Aussie yen, the one I'm in, I do believe is let's go back over here to it. Aussie yen +5, Kiwi yen +4. So just barely tall enough to ride, right? Barely tall enough to ride. I was reading some bank reports elsewhere, and it was talking pretty highly about the Aussie and pretty weakly about the yen. So that obviously kind of contributed to the thought process there. just in looking at some of these bank reports I was looking at. So that was another piece of information I had in my head, despite it being a lower bullish score, for me to go ahead and hop up in, especially once I saw it break through or close very strongly after it did pierce that demand zone. It was just very, very strong reactions. So yeah, that's going to be the scorings for those for you. Sitting on 20K profit on GDXW, been adding to it for years. Hey, all right. What is GDXW? I've never even heard of that. Oh, gold miners. Okay, there you go. There you go. I don't know how far back it goes. I've got till October of last year. I don't know if I have all the data on it. Nice. Make you some money, man. Get you some of that. Get you some of that. Might just be a little bit attentive to this overhead resistance that you're about to come into. But other than that, you know, always keep these landmines in the back of your mind. It's not to say get out of your trade. It's just to say, hey, if you reach that point, you could get some type of retracement, right? And it may turn around and continue. So just expect that when you get up to that area. If I'm on the right ticker, GDXW for you. Invest for income. There you go. There you go. James, trading's not for everybody. And for some people, investing is for, it's for them. Just depends on how much a heartbeat that you want to have, or how high you want your heart rate, right? Flower Foods, EU, and Core Energy. Oh, we're getting into some funky stuff, Morrow. I'll give you a quick look at that. Guys, let me know if you have any other currency tickers or anything in the meantime. Well, that's down, I can tell you that. So your FLO is pretty well down. You got structural lows, you got EMA lows. Over here on your 4 hour, you've got lows. So if you're trying to buy this, you'd be catching a falling knife. Just keep that in mind. Yeah, we have earnings coming out of peers. Pretty terrible earnings. Unless you're trying to short this thing, I would be careful with buying this. That's all I'll say on that. Right? On Core Energy. Guys, I don't want to get into too many stocks. This is more of a currency channel, but yeah, same thing. This ugly chart. Downtrends left and right. I don't like it. Be careful with this stuff. Okay. If you're trying to buy this, you're catching a falling knife. But if you're trying to short it, then yeah, you've got a legitimate understanding, a legitimate, faith in some possible supply right in this area, which also coincides with a daily supply. So daily supply, about that one. Yeah. And oh, by the way, these are penny stocks. This is a penny stock. You got to be careful with these penny stocks. There's no way to utilize the bank's liquidity for a lot of these, if not most of these penny stocks. Okay. They're not trading these. They can't trade them because I don't know what the liquidity or the volume is on this stuff. But if they place their normal size order on penny stocks, guys, it's going to go to the moon, and they're going to get a way, way, way worse fill than they ever dreamed of getting on most, large cap, medium cap stocks, not to mention gold, silver, currencies, all that. So be careful with penny stocks. Yes, there is a way to trade it. And yes, I actually know how to trade it, but it's not the same strategy I use for currencies, gold, silver, everything else. There's a little bit more of a retail feel that you have to have for penny stock trading. Let me think here. Tim Sykes, if you're a penny stocker or you've got interest, I would say read his book. I did read his book, and I can't think of what it's called right now off the top of my head. Complete penny stock trading or something like that. Yeah, just be careful with that stuff. That's only something you want to do, guys, after you've been around like the regular markets for a long time and you understand liquidity and how it works. If you're a brand new person going into penny stock trading, just be careful with that stuff because it is a completely different animal. Trading itself is the Wild West of industries. Penny stock trading is the wild, wild west where everybody's walking through town drunk and on drugs. Okay. So it's way too unpredictable is the point I'm trying to get at. Double bottom. Yeah. Double bottom is one thing, Morrow, but unless you start breaking structures to the upside, you don't have any changes of character, right? I'm just trying to save you from it, man. I've been there and done that. A lot of us have. But when we catch falling knives, guys, we lose our hands. So just keep that in mind. You know, I'm a trend trader. It's easy for me to say, because if I look at this chart, I'm trying to sell it, if anything, but I'm not going to sell it at the bottom. I'm going to be waiting for a retracement up, potentially to a supply zone like this, right? But again, this is a penny stock, so it's a whole different way of looking at it, right? Whole different way. And then obviously you have a supply here as well. But anyway, yeah, guys, I can't really get too much into, penny stocks on this channel. Sorry. Anyway, I'll save that for you. We'll come look at it another time. What else was I looking at, guys? Let's see. We went, did we do gold and silver already? I think we did, right? Oil. That's what I wanted to look at. So oil did finally chew through the rest of this weaker supply zone I was telling you guys about. That's the one where we had our gap down, and I just drew in the red candle just for kicks. Okay. But we finally did chew through that. Now, oil was on our list for a short while, like a very short while. It was on our bearish list, I think, a day or two ago. But even if it comes back on, guys, then we have a structural break to the upside. I think the trend is trending right now. You still got the uncertainty right now over in the Middle East with between President Trump, Iran, etc. And but there's also another overhead resistance coming up. Now, this is a weaker one. I think this was the weaker one. Let me go double check. Did I lie to you? Yeah, another weaker one. So we have a strong gap down. Structurally, this looks great. Just to be aware of as far as like an overhead landmine that could potentially wreck a long trade. But the volume wasn't that great. It's not like it had strong volume, but you don't want to ignore the gaps. Never ignore a gap, guys, because when you close a gap, quite often the whole reason that thing gapped to begin with was because, you just had a gigantic supplier demand imbalance come into the market. So you always want to look for the source or the genesis, if you will, of that gap, and just know that price could very easily pierce that and then turn around and get a strong reaction from it. So I would expect at least some type of pullback, even if it pulls us back to this consolidation zone before continuing up. But I just don't have a plan on oil right now. If we start getting a little more kinetic energy going on, I know President Trump's going on and on right now, of course, about the economic sanctions or the economic D-Day, as he calls it. Well, if that's the case, yeah, crude oil is probably going to go touch 100 again. I don't know if that's a hot take or not, but it's been fairly subdued lately for its normality. Right? We go from a lot of strikes to ceasefires to ceasefire in name only because there's still strikes going on. But if we get those threats come into fruition on economic sanctions, hey, who the hell knows what's going on? That's going to create even more uncertainty. So oil could very easily spike all the way back up there. 90s, 95, 100, possibly more. Hopefully not, though. We don't want that to happen. Still want them to kiss and make up, ladies and gentlemen. Bitcoin, Ethereum still flying to the upside as well. What about indices? I haven't looked at indices with you guys for a minute. Okay, so looking at trends on indices, your S&P, clearly up, guys. I think for a minute, we were giving a little bit of a bearish signal. Yeah, we got the Russell. Okay, so I guess, one of them was on the bearish list. But anyway, I ain't trying to sell those either. The EMAs over here on the Nasdaq, still pointing bullish. But if we break structure here, get a retracement, my EMAs might flip back to the other side over there. This thing could give us another push to the downside. But they are neutral as we speak. I think Dow still looks the prettiest as far as uptrends go. I mean, that's the most distinct look for higher highs and higher lows you can get. Is this just nothing more than a pullback over here? I'd be interested to see what happens if we bounce into this demand over here. The base itself was a pretty strong liquidity spike within it. Okay, this is that July 31st candle. But then the leg out volume was not that great, I don't think. So let's go back. Let's go look on a 1 hour just so I can see my volume picture a little better. Spike up, or gap up. Do we have any volume? Nope. Now this is this is the after session hours. This is the earlier part of Asian hours, I should say, when we got that gap up. So that happens a lot. Okay, when Japan and Asia and all them come in, start trading our markets, you don't always get a lot of liquidity, but at some point they may take it up a little further. I just don't think that's a very strong push away. The liquidity will happen during our session here in the U.S. In the morning, and that's what created kind of that that big drop push up by the end of our session here. So yeah, I don't know. Not interested in trading it, obviously. Not interested in any of these indices, to be honest with you, unless it would be something like the Nikkei, because it's at least, same thing. Yeah, structurally, it's just not there yet. Big pullback, big lovely drop on Tuesday. A little bit of supply here, guys. This is a skinny zone right here, but that is a supply with some pretty decent liquidity coming out of it. Leg out, yellow VSA candle. That's at least showing that the effort's matching result. You got all this liquidity forming here. You got some liquidity forming here. Possibly that could be a short, but it's not financial advice, because I don't think I would be putting money on this particular one just because it's kind of out in the middle of no man's land. Right? It is 50% fib if you're looking at it on a fib level from swing high to swing low. But I think it's a little too skinny. I just don't like selling something out here in the middle when I have all this free space right here, because it very easily could just chew right through it and go find a higher premium. Okay, a little higher up. So, but this is the risk we run, guys. At the end of the day, this is why we just risk a small amount on our trades. We don't full port anything. I keep it at about 0.5% max on my trades per trade. Okay, often 0.2, 0.3%. But I could see a small position being taken in a place like this short, but expecting that we could get a loss and it may just go up for a higher premium before getting another push down. But by then we'd be having another low or a higher low, and then possibly looking to attack and break higher highs. So anyway, guys, that's all I got for you for the day. I've reached the end of my show. So drunken on drugs. That's right. All right, guys, I got to get out of here. My time's expired. Have a wonderful Friday. Stay safe out there. And come back next week. We'll run it all back again. Peace, guys.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.